Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. All right, everybody, welcome back. Hey, good morning to you. Thank you for being here. I hope you guys are doing well, or good afternoon, depending on where you are in the world. Also, my light is really white today, and I'm already a very white guy, so I don't need too much more white color. See, I got to pretend I'm a little more tan than that. There we go. Hope you guys are doing well. Some more turmoil in markets here. Another day, another, creepy headline, scary stuff going on still. Energy Secretary Wright says the U.S. is, quote, not ready to escort tankers through the Strait of Hormuz yet. 3 more ships were struck in the Persian Gulf as Iran warns of oil prices hitting $200. I saw the video. I'm not sure if you guys saw that. I think it was a commander of some sort of on the Iranian side, mentioning, basically to the West, be ready for $200 oil, really trying to, kind of tout that they are still in the game kind of thing. It was and the markets didn't like that. At the same time, oil prices touch $100 again as Iran ramps up shipping attacks in the Persian Gulf. So, continued turmoil on what has been problematic in this market, which is oil prices. And if you're wondering why he said, or why that post said oil prices hit 100, although WTI did not, I think they're referring to Brent. Yeah, Brent crude oil did tap over $100 a barrel. So really interesting stuff. Precious metals continue to be sleepy. Dollar index is popped higher here this morning. Take a look as we continue to see that flight to safety. The dollar index continued to be a winner here recently, beneficiary of all this stuff. U.S. indices are lower here this morning. They were down more so overnight. Here's a look at the S&P 500. And this price action is just not very constructive, right? If we're looking at this from a, response to the 200-day moving average, we talked about this yesterday. We pointed out that you had this kind of across the indices, a response to the 200-day moving average. But at least for now, what we can see happening is you got the bounce, right? You had that immediate sharp response to the 200-day moving average. And then you're kind of seeing stalled out price action here. So this is definitely not what you want to see in regards to if you are a bull. You want to see this thing kind of hold together. Nasdaq has actually been holding it better. Dow Jones, which I am still short, you can see had the rejection intraday 2 days back, and then yesterday had follow through to the downside. And then today, so far, you've had, what looks like continued bearish price action. I would not be surprised if we're headed back to that 200-day moving average to retest it. And the question is for the bears, are we actually going to get follow through the lows? If we take a look at the 4-hour chart, this chart just looks very bearish to me. You have resistance, 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 resistance. Each time price has been able to get some momentum going, you are seeing sellers come back into this market. So when we take a look at the Dow and we take a look at the Nas, again, Nas actually looks better, I would say, than others. S&P, Dow, and Russell looks pretty rough. The Dow Jones to me still continues to look like the path of least resistance short side. If I was, if I'm going to be short one of the indices, it's still going to maintain for me to be the Dow. We did get a nice response from this retest of this area. I have trimmed my initial stop loss. So I have, if this thing were to rip to the upside here, some sort of announcement that the conflict is over or there's some sort of resolution, then the Dow Jones would likely rally pretty sharply. But for now, I maintain that short exposure. A couple things that I've been pointing out here in regards to why I am still leaning on the short side here is because when we take a look at the asset scorecard here for Dow Jones, what you can see is that some of the recent data that we've had, inflation data has been really rough. We've had a rise in the 2-year yield, the PCE, PPI, and CPI. CPI went from, it wasn't a bad number for CPI. It just wasn't a good one. And the problem is we've had a round of not good inflation data. So overall, in aggregate, we have this kind of situation in which you have a very bearish overall inflationary bias. And you couple that with the uncertainty, the unknown of how long this geopolitical conflict will go on. To me, the only response that seems like a logical one from the Federal Reserve is to pause on rate cuts, right? To say, all right, we've got to wait here till we'll see. Iran's new supreme leader will give his first announcement regarding the war in the coming minutes. Interesting. We'll see what that has to bring us. So anyways, my thought process is for now, I have enough evidence here. We did get some oversold readings here recently. That is what is popping this thing from what was a bearish reading in recent days to now just a -4. It is that sentiment reading here. What you can see is that you did get kind of a flush out in sentiment. And this is arguably, for me personally, one of the most concerning aspects of my short. If I was to poke holes in my own approach here, is Edge Finder for lifetime? Yes, it is. It's a one-time payment, and then it's yours. So if I was to poke at my own short side action here, what I would point at is look at the AAII Investor Sentiment Survey, and I don't love that I am within the crowd mentality here. Now, that doesn't mean that, sometimes the crowd is right. Sometimes the crowd is right in markets, believe it or not. But I generally don't love the backdrop of trying to short in this environment. Now, again, this is why trading is hard, is because at any given time, this is kind of a frustrating thing. At any given time, if you showed me a trade in which you are long or short, I could stack evidence that would suggest the contrary. That's why trading is hard. There's always a reason to go long. There's always a reason to go short. As a trader, your job is to sort of filter out what matters most, to follow the macro story, to follow momentum in price. And so the thing that I struggle with the most right now with the short indices trade is that crowd sentiment is pretty bearish right now. So let's take a look at this. Do I have thoughts on gold? Yes, don't worry. It's always asked. What about gold, sir? Yeah, we'll talk about gold. Don't worry. I'm gonna give you a fair warning. Gold is super boring right now. In my opinion, there are better things to be trading. Gold is asleep at the wheel. I saw gold driving down the highway, completely asleep. So I don't know how things turned out for gold last night. It was asleep at the wheel, is what I'm trying to say. Yeah. So, okay. What I was saying, investor sentiment survey, look at this. I don't love that I'm short into the crowd's rising bearish sentiment, but I also have to say that I didn't short it at peak pessimism, right? I didn't short the lows. I waited on the Sunday open. This was my game plan all week. This is exactly what I mentioned wanting to do. Let me see if I can go just bring this up. I mean, this has been the game plan for me this week, has been, where am I at? Nick's journal. Gosh, I've been busy. Another wild market open. This was Sunday's open, right? Oil jumped massively to $108 a barrel. Game plan was looking to fade any pops in indices on the short side with small size as always. I don't love shorting indices, but believe the easier path is lower currently. I still stand by that. I still think that, and that's exactly what we did. We waited for the post Sunday panic pop and then sold into that. That is where I feel if I'm going to short indices, I can't do so on, shorting the lows, right? Almost never. Like that's such a hard trade because when it's very obvious that the market is going to tank, that's when you get these like face rippers for the rest of the day, right? It's so often the case that when you get this panic on the open, people go short, they buy gold. Oh my gosh, it's the end. And then that is just like cannon fodder for market liquidity, right? Just goes boom right the other way. So on that fade, however, I looked at things and I was like, okay, well, the short bias still kind of makes sense, but now the risk reward makes a little bit more sense. And that's where I took that short, especially when we had bad jobs data and inflation and 2-year yield data that is signaling some problematic stories. AKA the dollar is rising, right? This dollar pressure to the upside. I said this in my video yesterday. One of the biggest concerns that I have right now for indices is the rise in yields and the strength in the dollar. Take a look at the dollar. We are trying again here, guys, for this 99.50 break. We have not been able to be successful at these levels the last several times we've tested this. However, while bears can kind of point and say, well, look how strong the bears are here, bulls can point to the idea that you've rejected multiple times, but you haven't had any follow-throughs to the downside, right? Bulls have been able to pick up the pieces every time and try again. And eventually that ram is going to break through the front gate of the castle. That's what we're looking at here with the dollar index. In my personal opinion, I think dollar has more upside. I am long dollar. I think yields could continue to move higher. They have been, rushing higher here recently. Bonds have been sold recently pretty aggressively. And so I think that kind of remains front and center for markets. Now, again, how am I going to manage this short position? Well, basically, what I'm looking for is if this thing rallies all the way through, I have trimmed my max risk on this trade. So I'll take a small loss if it doesn't work. But what I am really looking for in coming days, today, tomorrow, into next week, would be a sustained flush through these lows. If you get this kind of move here, then what I can do is I can actually officially lock in something on this trade. So let's say we had this move here. At this point, the break through those lows, a lower low would get me to take this initial stop loss and to trail that behind market structure and then see where it wants to go. On the short side, I like to be pretty aggressive with my trailing stops. We talked about this yesterday in the Discord chat. Let me see if I can pull up our messages. I don't know if I'm gonna be able to find it. Chat room has been popping recently. It's been very, very busy, but I dropped a comment yesterday. We were chatting it up. Okay. So I said something. Maybe I didn't. I thought I did. I definitely did. Anyways, I'll just give you the highlight anyways. What happened is I basically pointed out that on the short side of indices, you tend to see markets move like this, right? The stock market moves like this, and then it moves like this, and then it moves like this, and it moves like this, right? So it has very steep, quick drops and slow, grindy upside moves. We have claims here. Let me just check this really quick. See how unemployment claims came out this morning. They should be dropping now. Sorry, I almost missed it. Unemployment claims, looking for 214,000 unemployment claims here. Trade balance better than expected. 213. Okay, so we came in pretty much in line with expectations. Let's see if there's any sort of reaction on markets. Nothing huge. 213, that's going to be just a tad slightly better than expected, but basically on par with expectations. So no shocker there on the unemployment claims here. However, markets are moving this morning. Take a look at the S&P 500 here. We are almost back down towards session lows here for SPX. Well, at least New York session lows. London session, we went as far down as 6704 or so. Dollar index staying firm here. Volatility is higher today. Again, we opened up the show here today with covering geopolitics, but basically continued hawkishness from the Iranians on the war, threatening the West Coast, as well as threatening $200 oil. These are things that are continuing to spook markets. And again, this continued uncertainty, I'm not living in it permanently. I have no idea what happens with the geopolitical situation long term. I just know that right now you have geopolitics. Hold on, let me get you the link, Chris Pulver. He just asked me for the link to join, invite guest, copy that. Okay, should be here in just a second. Yeah, so with geopolitics, I can't tell you where the end is on what's going on with Iran. You're going to see content creators, you're going to see YouTubers, you're going to see commenters on YouTube, people saying, the conflict's going to go on for a long time. Other people will say, oh, Trump's going to get it done in a week. Look, nobody knows, and it's unlike the tariff stuff that was a year ago. Trump could pull that card back. But in this circumstance, the Iranians have a state of their own, a mind of their own, right? So Trump could say, hey, I want the war to be over, but the Iranians could say no, and vice versa. So that adds this dynamic that is that uncertainty. That's where, when Trump comes out and speaks and says, the war is going to be over in a week, maybe it will. But part of the reason that I actually faded that conversation from Trump was because this is distinctly different than the tariffs, in the sense that Trump cannot control what the Iranians say. Now, the Trump administration may know the plight of the Iranians, the situation that they are in, and know, hey, we've got them on the run, we got them on the rinks, or not. Like, they may know that, but they can't fully dictate or control or predict what the Iranian government will say, what the Iranian military will do. And so even though you have had these pops in sentiment, Trump saying the war is going to be over in a week, there are additional layers to this, unlike the tariff stuff. So that was part of the reason why I took that as an entry, what I believe to be a low risk, high potential reward short on the down. That's why I'm still in it. I'm going to bring in Chris Pulver here. Give me 1 second. I'm doing it myself here this morning. So let me just switch this, and then we'll bring in Chris. Is he there? Nope. Hold on. There he is. Hey, Chris.
Morning.
How's it going, man?
Good. How are you?
Pretty good. I was just, you might have heard what I was saying there, but just explaining the, how this is a little bit different than the tariff situation. Actually, Chris, we actually have two things now that fall into that bucket that I've been kind of concerned about in markets. The first one, right, comparing this tariff stuff, right? Last year when we had the tariffs, part of the reason I felt that was a good buying opportunity, I felt pretty confident doing the buys that I did. I know this is hindsight speaking, but I bought early, but I did buy the dip. You bought the dip. We were in there buying that dip. However, I felt good about that because I was like, okay, the Trump administration is going to hate what this does to the stock market. They can pull that. Mm-hmm. Same thing is happening now, except Trump and team cannot control what the Iranian side of this story does. They also Iran is directly incentivized to continue to make this painful for the Trump administration. In addition to that, why I said the reason there's two of those types of dynamics now is because software is also not something. We saw the market slip on the software worries about AI disruption. That is not something that can just be whipped away on the dance floor, right?
Right.
It's not something that is easily, it's going to be an ongoing struggle for the market to determine whether or not software companies, which make up a huge chunk of the US stock market, are going to be disrupted or have a place in the future. So this is why I'm feeling like there's a couple variables, there's some unknowns, some uncertainties that the market's just not going to have clear answers on for a while. Now, the war could end, but software continues to be an overhang.
I agree. This is just one of the many things you just throw into the mix of, we thought last year it was pretty solid watching the market climb this wall of worry. I think the sentiment around everything has turned a little bit more cautious. I don't know. I mean, what did AAI sentiment do with yesterday's print?
It
probably
was
a little bit more bearish.
Yep, we were looking at it more bearish.
46.4.
Yeah, look at that steep rise in bearish.
That is crazy. Well, yeah. It's things like that is a bit of a contrarian that just keeps me kind of in the market. But I'm telling you, I'm so cautious as far as like where this little correction can go. We haven't really had, everyone thinks like a little, 1% sell-off day is ugly. It's like, that's nothing, man. I mean, we had 3% days twice last year near the end of the year in October, November. It's just nothing bad is really happening on the index side yet. And like we keep talking about, it's like, it feels like something weird is going to happen. And I just don't know what direction that is. Let me ask you this. What percentage are you leaning towards? Like, this market's probably facing more of a bearish correction versus a bullish push. What's kind of your probability, or what's your gut telling you as far as, what do you think? Well, out of 100%, it's like, how much is going bearish? How much is leaning bearish versus bullish right now?
Yeah, I think for me, I think actually that's a great question, because it's never going to be 0 and 100, right? Because if it was that obvious, the market would just be absolutely, in the mud right now. But because by the time it gets that obvious, the market's already made all of its move. I would say that right now I lean probably 75-25 in terms of, I think there's more bearish downside. I had a couple conversations with you, with my other trading comrades, and basically, I kind of feel like, and I sent you this message basically, that the market being down 4 or 5% the last couple of days has felt like, given everything that has been thrown at it, it feels mispriced to me. And I know, rarely is the market wrong. Rarely is the market wrong. And rarely do I honestly disagree with the market. But I felt and continue to feel like everything that we've got in front of us, barring some sort of, the war is over posts, by both sides. As long as that doesn't happen, I feel like a 10% move lower in SPX is a pretty fair spot to be in. And so with us just at 4% off the highs, which sounds like laughable, that was part of the reason why I shorted Dow on the rebound on some Trump commentary. I took that short position. At the time, we were down 5.5%. So Dow Jones, I feel pretty similar, maybe 9% down is a very reasonable spot to be trading. So that's where I kind of think we could continue to see. A couple of days back, I took that short. So I lean short side. I'm not in the camp of thinking 25-30%.
Right.
Otherwise, I wouldn't be, selling cash secured puts and holding my stocks.
Agree. Okay, I'm about with you. I'd say probably, as far as like the short term lean, I think that we just have so much pressure mounted where it's going to be difficult to get the rally. I had a segment yesterday where we saw the Nasdaq was kind of outperforming, and that's putting it very lightly, because basically it was just down less, less than the other indexes. I mean, the Dow is probably the one that is performing the worst outside of maybe small caps with some volatility. Yeah. But I think that in order for us to get to all-time highs, we have to have the top 10 stocks help. And right now, that's the rotation out of them. The whole year has been the dispersion trade is rotation out of the 35-40% Mag 7 or the top 10 stocks and into other stuff. The problem is they're still, as a whole, so small that without the top 10 stocks actually showing stability or bullishness, we're not going to get all-time highs. And so this churn that keeps happening, and again, it might still be organized to the downside. It might be, a nice little backfill for, we had this, I think peak to trough was maybe 6% on the S&P, maybe 8 to 9% on the Nasdaq, but that's just over 6%. I think 10% is fair. And I think, 10% that looks maybe along this line, like 10% that just kind of looks organized might be, yeah, it might be like an annoyingly frustrating, painful, longer than you think drawdown versus like the 10-day 10%, the 10% drop in, 3 to 4 days that you buy that dip aggressively because it's an instant V bottom versus this might take, 4 to 6 months to set
Right.
up that pullback. And I mean, I do think for this administration too in the US, they don't have a lot of time to see this market go down. I mean, I think in order for them to even have any remote chance of keeping the House and Senate through midterms, we probably have to have the market at all-time highs. And I don't know. I almost wonder if you're going to see just so much jawboning from the Trump administration versus actually seeing price reflect, the good things that they're saying are happening. If we're extending this conflict in the Middle East with Iran, I mean, it's just gonna weigh on sentiment more than anything else. I mean, not surprisingly, AAI took a big jump to the upside. So, like I said, this could be a long drawn out correction. It's going to drive the frothiness out, which I think is a good opportunity to be buying dips. But I also don't want to see this turn into like the bigger distribution at the top that turns into a bigger dump because it's like, well, now it's topped. Now there's no optimism to get us back to highs, and it just goes from a little organized correction to like now we start to dump, right? And so I think that's where we're coming into that key support is I don't want to see the S&P really breach 6,000. If we breach that, I feel like that momentum flips hard, and all of a sudden we're talking, maybe this line of defense around 56, 5,700. Other than that, I mean, we're going for April lows, and that's not going to be a fun 2026 if that's how it plays out.
Yeah, and adding to the pressure has been what we've been discussing here on the show, which is that strength in the dollar. Look at, this chart is. I was pointing out earlier that you had this major level of resistance, this 99.5 level that continued to get every time you knocked on the door, sellers would come back in, push it back down. But noticeably, and equal point, the bulls were holding this level right here perfectly well, and now we do see what looks to be maybe another attempt. That's the highest close that we've had on the dollar in several weeks. We are testing the resistance point once again. And the question is, can we actually clear that level? Again, we have rising yields, we have sticky inflation, and that's before we even get the new readings of next. We won't get March's readings for inflation until obviously in April because we report the prior months in the current month. And so we'll get some new inflation data. So I think we're basing out already. If we just go take a quick look at that, right? Asset scorecard here. I'm just going to pull up the dollar. If we take a look at, inflation, right? PPI, PCE, 2-year yield, CPI. The CPI was in line with expectations, but the point is, overall, we've had sticky inflation, and this is not even reflecting what's gone on with oil prices in March.
Right.
So,
which will be very different come next month.
Yeah, so you're looking at a situation where inflation could be in the process of bottoming, and what would really confirm a bottom, most likely, would be if this conflict is not over in a few weeks. If it goes on for some time, and I know that the Trump administration is very keen on saying, oh, the war's almost over, it's going to be done. That's because that's exactly what they want. They want this thing to be over quickly. Right. And, hey, from just as we've always said on the channel, from a humanitarian perspective, let's hope it is. However, the Iranians, as we've talked about many times, they are incentivized not to do that. Yesterday, there was the commander. I'm not exactly sure the person's name or their role within the Iranian military, but came out on camera saying, prepare for $200 oil, basically escalating things. And I don't know if we're going to see $200 oil, but the point is, Iran doesn't seem to want to just back down without, something going in their favor in the negotiations.
Right. Well, I mean, is $200 oil sustainable? You know what's going to happen with $200 oil? We will do everything in our power to get off of oil. I mean, we're all going to be riding bikes, Chris. Well, I was going to say, it's like Tesla's about to get a big inflow of new buyers because nobody's going to want to pay, $4, $5, $6 a gallon in the US. And look, we have it so easy. If you're in Europe or Canada, per liter, it's almost double the price. So I mean, I'd say our worst state is probably California, just because of all the other BS that they have with taxes and bureaucracy. But I mean, my buddy lives in Sacramento and one in San Diego, and I think they're at 6 and change for gas right now.
Yeah, I think we're
Anyway,
like 350 where I am.
yeah, I mean, it was, dude, literally 2 weeks ago, it was 269 out here in Utah, and it's up to 350. So
Wow.
it's almost, I mean, it's almost a 30+% increase in the last 2 weeks.
Yep.
So
Yep.
anyway, I don't, I just, if that's what happens, it's just going to be, okay, well, we obviously can't have this happen. We can't, sustain like everything we need as far as reliance on oil. We can't. What are we going to do? We're going to ask all of our energy companies to start drilling like crazy because now it's at $200. It's like, to do what? Drive prices back down? I mean, the good thing is everything is extremely profitable with the oil that you sit on. But look, I'm not going to pretend I'm some macro oil specialist. I just know that when we have ranges in oil that everyone kind of lives in allows, and all of a sudden we're up to $120 to $150 to $200 a barrel, nobody wants that. Like it's too high, and that's clearly too high. Sub 50 is too low, and it's clearly too low, and it's just a shock. And what that means for people here, it's like in the U.S. especially, our biggest sticky points of inflation would be our energy prices and our food prices. So there's a direct impact on how sticky inflation gets in the U.S.
And Chris, I want to just kind of highlight something that I think is really important for us to listen. If you've started trading, and this is probably going to be the vast majority of people in this audience, this is something to think about from a macro perspective. We have lived in an environment, if you've been trading for 1 year, 2 years, 3 years, almost 4 years, then you've mostly been in a situation. If you started trading after July of 2022, oil has been mostly a grind lower, a trend lower. And this is probably one of the most hospitable things that could have happened in the last few years.
Yeah.
There's nothing, this is a positive in so many ways. It's good for inflation. It generally leads to less volatility in markets in the sense that, oil shocks, inflation shocks, they're like some of the most scary things that can happen in markets. And so we've lived in this period of time where inflation and oil have moved lower and things have been, for the most part, pretty good. And now that, this is all going on in the Middle East, you can see how quickly oil prices exploding higher can erase some of the positive effects. That's another reason, Chris, why I think, if you think right now, the reason I kind of justify thinking, okay, Dow could be down 10%, S&P could be down 10%. It's all contingent upon how long do we stay around this area? It's not, do we go to 108? Do we go to 88? It's not this, everything above like 88, let's call it, is a problem where I'm like, okay, yeah, oil being up here anywhere above, I mean, even really like above 80. We've been living in this low oil prices. You stay up there, that's going to stay pressure on, the stock market that we haven't had in a while.
Yeah. And just one thing. It's like one thing is enough on top of everything else, on top of the uncertainty, on top of the long in the tooth rally, that it's just one more thing this market has to absorb, and somehow one more thing this market has to shrug off. But I think it's just hard to shrug off right now. And the pressure is on. And like I said, it's a scramble to see how you can spin this into something positive, because I don't think you can. And obviously, if you spin it something positive, you're gonna have to see oil prices cooperate to the downside, because if they don't, you can't spin this and say that this is over when oil prices are up 5% today.
Right.
You can't spin this when oil prices are back up to $100 a barrel. I mean, one thing I'm looking at just this morning is futures market down, mags down. I mean, again, like I watch this stuff every single day. 0DT is obviously, important for daily flows. Look at my biggest level. I mean, if we're below 67.75, which we will be, we're opening up around 67.30 this morning. 66.50, we have lows at 37. I mean, Nick, I don't think it's unreasonable that today, tomorrow, we might see a slide lower that tests recent lows. And we have another, lower high, lower low, lower high. The market might buy that dip maybe Friday, maybe early next week, and it goes back up again, but only to see still lower highs coming. And if it gets worse, like we break 66 and I swore that if we firmly broke out between the daily and the weekly, there'd be some follow through I mean, I'm not wrong, but you can see like that one day Monday bump. It's like, well, we just came right back to support, and they're seeing the market is kind of leaning over from that again.
Yep.
So if we have more of the flows lined up to sell today, then 66. Well, I guess on SPX, because the open to close, it's around 66.36. You've got the SPX CFD that's around 65 and change. Measured breakout around 65.50 to 6,500. I just wouldn't be shocked to see that. That's only still about a 7% correction. So we're still not talking double digits here. We're looking at maybe 7% right there to those October 10th and November 20th lows. But again, from there, it probably gets a little bit uglier into like the maybe 10, 12, 15% before this, has to somehow get fixed, get jawboned. And again, price will lead us to that kind of decision. But right now, I just feel like you said, that's what I want to ask you as far as your percentage bearish to bullish, because I'm kind of with you. I'm like in that 70-30 camp of like, I don't know how we can shrug this all off and just get back to all-time highs unless something amazing happens with literally top 10 stocks or Mag 7 only, which I don't see that happening right now. This is just this like slow, painful paper cut to the downside. But it's also not easy just to stay short, because if you're short for a day, this market's literally 50-50 going up and down, up and down, up and down. But it is leaning more to the downside. So, I did put in some bear call spreads near the highs. I put in some broke wing butterflies near the highs. I also have a butterfly spread that goes out to Friday. I'm curious today. This actually could be pretty nice. If we come down to these lows, I have a nice little like 100-point profit trap down here around that 65.50 handle. I paid $120 for that trade. It could worth up to like $5,000 tomorrow. So I'm like, I kind of like it to get there if possible. That's a pretty good asymmetric trade. But it's lining up to be a little bit of a lean to the downside.
Yeah, and for me, it's just one of those things where I'm like, I generally don't love being on the short side, and it's very rare. I sent you that message when I took the short. I'm like, dude, I never short.
I know.
I have to. I mean,
tight leash on the shorts.
Yeah, tight leash for sure, because I've got the stop on it, and my thought is like, if we flush through those lows, stops coming up or coming down, I should say.
Yeah.
Just gonna lock it in, and if nothing else, this is more so a hedge than anything else for me, Chris, because it's like I look at the portfolio and it's gonna be slightly red today, despite I've got this short position because I've still got long exposure in aggregate, just because of all my, other stocks that I'm holding and short premium positions, etc. But it definitely cushions the downside. And like you said, tight leash is the perfect expression for it, is I'll, try and ride that down with it. Dollar index being that strong, again, is kind of part of the equation for me. I am long dollar. I'm short pound dollar. I've got that position running here. We look good. I took my first half of the position off, looking for a flush back down to the lows on this one as well. And again, it all keeps coming back to oil, because the thing is, I was thinking about this, Chris. It is weird to me, and I'm not trying to bring politics or get too political on the stream by any means, but it is interesting to me that the Trump administration chose to do this at the time that they did. Doesn't it feel like kind of shooting themselves in the foot, knowing that, they have midterm elections right around the corner? Doesn't that put them in a really like, knowing that they know, I mean, regardless of whether you like or dislike the current administration, there's a lot of smart people on both sides. They're smart enough to know that gas prices, if they spike, likely it takes time for that to work through the system. So it's interesting timing, in my view.
Yeah, well, I think there's bigger power plays in this whole situation. I caught a segment. He's a pretty popular YouTube guy. So Graham Stephan, Andre Jick, same kind of up and coming. He's got 3 or 4 million views. It's all like news based, pretty well rooted in research. Anyway, he did a piece on, it's like basically 4 power plays in the market. One component of that would be that for the last 30 years, there's been threats from Israel. And the last couple of years, it's become more intense. And so, I mean, honestly, I think Marco Rubio in the last 6 to 12 months has commented that, Israel's threat was, we're going to launch an attack on Iran. And if you don't do it with us, we're going to do it regardless. And again, I don't know, like I said, I'm not pretending to be like the Middle East expert here, because I'm certainly not. But I do think that there were multiple power plays at one time where it's like, okay, if oil prices are up, does that hurt China? If we have the oil flow in the Strait of Hormuz mess up supply chains, that hurt China. If Israel is going to launch an attack anyway, we have to come in and step in and pretend to be an ally. It's like, I don't know what's right. I just know that, do your own research and try to dig to it, but it feels a little kind of conspiracy driven. But at the same time, it's like, I could see merit being in like little bits of truth to all of that, where it's like, there's clearly a reason why we would have done this, because just to say, okay, what do we need to do in the US? I mean, Trump, if anybody, has been the most nationalistic, isolationist president we've had in, multiple, like probably 3-4 decades.
Yeah.
Outside of, our war in Iraq with George W. Bush, it's like, it has no real benefit to us on the surface, but there's some reason that during this year of midterms, during this year of trying to keep the markets higher, trying to make sure we have all these things to brag about, why would we go outside of like controlling what we need to control here in the US and throw this conflict in that clearly is jacking up prices in oil, ruining sentiment apart? We've got, Trump's support in polls are showing like all-time lows in sentiment approval. It's like, yeah, it's more than just let's do this. It's like there has to be some strategic reason. There has to be some purpose. But
these things are,
I don't know. It's above my pay grade, I guess.
These things are always, pre-coordinated.
For
always,
sure.
Right. It's not, as easy, I would imagine, as Trump just saying, all right, yeah, let's go attack Iran, right? There's more to it. There's been plans in place long before Trump even was the president. I'm sure, this is an ongoing, these two countries have been at it for a very long time, to say the least. So there is, something there, and I have no idea exactly what it is. Again, we do not claim to be Middle East specialists here on the show, but it does, every once in a while, our world here in trading macro land does kind of cross over into what is going on geopolitically. So being as informed as we can is, part of the game plan, I guess. Anyways,
let's put a pin in this, because I would say by the end of this month, Nick, what else are we going to be talking about? Because it's probably something different. That's the one thing we're pretty certain of, is like these cycles are, on again, off again, lasts a week or two. It's like misdirection here, put people's attention here, get your fear mongering here. It's like in the next 3-4 weeks is probably going to be something else. So I'm not saying I don't want to keep at least tabs on this, because if it keeps escalating, but it's like, dude, we've been in the war the Ukraine Russia. I mean, that's been since 2022, and it's like, so we could have a low flare up now in Iran that seems like it's a hot spot, but it's like we might keep a presence there or drone attacks there or for 6 months, but we're not going to be talking about it this intensely for the next 30 to 45 days. There's no way the cycles will be that powerful. It's going to be something else in the next 3 to 4 weeks.
I think you're right, because we have seen that just be the theme for a long time now, right? Think about this recently. We went from software disruption, new Fed chair. There's just been this ongoing, Supreme Court, overruling the tariffs. It's like the market just kind of follows the main narrative of the times. And I think you take this stuff and you say, okay, well, oil is a very important component to our analysis, but there's still other things, right? You kind of have to look ahead of just what the headlines are talking about and think bigger picture, right? That's why I love macro so much personally, Chris. I like to be able to look at like, all right, show me inflation, show me jobs, show me, that stuff, because it can help you keep a level head. Part of the reason I felt so good back in April of last year, buying the dip, and we talked about this many times on the stream, the macro was not falling apart. Some of the forward-looking indicators, people making predictions, were very negative about the tariff stuff. But in actuality, inflation didn't go crazy. Growth stayed okay. And if you kind of just turned off the noise of Trump this, Trump that for a little bit, there was actually some really great trades. And I think like trying to tune that out to the best of your ability, know what you need to know, but don't obsess over it.
Agree. And even this year, I'm like, well, as long as we stay above April lows, I guess I'll be okay.
Yeah.
And that's where I positioned a lot of my trades. And I get that there's no guarantee. I might be taking some assignment that I'm like, well, this will be a fun little battle. But that's how far away I'm giving the market, just because I don't know. And, it feels like on my chart here, it's like we could be going, okay, let's say this is the little orderly correction, and then it picks up and gets worse. Well, unless we instantly see something where it's like the market's going to bottom here and then head back up. I mean, my concern with that type of bounce is that this is not the bounce. Like, imagine the battle right here in our brain, between bulls and bears. If we have a decent flush to this long-term trend line and we're here at the halfway point, Nick, you've got to be like a 50-50 of like, are the bulls going to take this thing back to highs, or the bears? Was this the flush the bears needed? This is the dead cat bounce. I buy for a while type correction. We'll see, but it makes a much harder case for the bulls to stay in control if the market breaks this 6,150 to 6,000 area, because down here, I'd say the bulls are extremely vulnerable. Although it would see a short-term discount that would be great to hold long-term. Long-term, sure. You're 15, 20% off all-time highs, great time to buy. But if 15, 20% from all-time highs becomes 30, 40, 50%, well, you're going to be a bit of a bag holder here, hopefully having some dry powder to then buy at a bigger discount. Anyway, to be determined, but I'm still kind of hanging on to the idea that I think this administration, this Fed, this everything we have in the U.S. to kind of control and manipulate the markets will still be throwing everything we can at it until probably September, October, until we decide, okay, the people have spoken, Trump approval is deteriorating, and the U.S. is now, creating a system that's a lame duck president. Executive orders don't matter. It's split between House and Senate. And we're just back to the stalemate circus that the Washington D.C. is. So that does make the next 2 years pretty lame as far as like, well, Trump's going to be vocal, but can he actually do anything about it? Yeah. Executive orders can just be thrown out. They can be vetoed.
Let me just give you this, and then I got to let you go because we're heading off to our next segment here. If you do get that flush in the market, then I still think that the underlying undertone of this market is that the AI stuff, I know there's jitters around it. I know that technology is so powerful. It's kind of, in my view, like the internet back in the 2000s. While that did turn into a major bubble that led to a terrible drawdown if you bought the top, keywords there, if you bought the top. So given that if we got a huge downside in the market this year, to me, that would be the prevailing theme. I'd say, hey, I'm buying AI stuff when it's being chucked out, right? When you have, tech stocks down like that, that would be a spot. That's probably where I would buy. I would buy in tech, but only, heavily if we saw a flush out on many other things, right? Oil shocks and inflation and then all that sort of stuff. Because I really do love the theme of AI, but it's like we always talk about, even a good stock, even a good theme, even a good index, etc., can be overpriced. And so rarely, if it does go on sale, that's where you can buy the things you like. And so that's how I would play that. I think, you give me that down 15, 20%. I'm going to buy tech. I'm going to buy healthcare, buy financials, and I'm going to sit in it.
One real quick before I know we have to go here a second. Yep. I saw some people saying like, well, the VIX goes to 60, I'm buying. Good idea, but I want to put something on your plate. The VIX was at 80 back in March of 2008, and the market still dropped an additional 47%. Now, granted, that was like the brink of financial Armageddon, but if you bought on the VIX is at 80, this is a great time to buy, the indexes still went down 45% from there.
Sure.
So nothing's guaranteed. And I don't care if the VIX was at 80, 85, all-time highs, 100 VIX. It's like, it seems impossible to get there. But look, we just saw oil have one of the biggest single week rips and single week sell-offs ever. We've seen gold and silver do things they haven't done in 50 years.
Yeah.
This is a market of more and more flow, leverage, extremes. And I'm just saying, like, there is no perfect trade that it comes to managing risk at the end of the day. You gotta have some dry powder for whatever happens.
I was going to say that if the VIX goes to 60, I'm buying too. The difference is,
but not everything.
Exactly right. The idea is like, if the VIX goes to 60, it's not a guaranteed that's the low, it's going higher, but rather, all right, things are getting fire sailed right now. I'll buy some. Doesn't mean there's not another fire sale tomorrow.
Correct.
But we could, long term, that's generally going to produce, on average, over many repeated iterations, going to produce decent returns, at least looking at historically speaking.
Agreed.
Except in 2000. So when it works, it works. When it doesn't, it sucks. So, that's the thing to remember. Chris, thanks very much as always for coming on, man, and sharing some thoughts with us here this morning.
Okay, we'll see you tomorrow.
See ya.
Bye.
Guys, we've got another show starting here in a little bit. He's not yet arrived here in the backstage. Just gonna stick around, James, if you hear anything. On the producer side, let me know if Miko's going to make it today or not, but should have him soon. I did want to do just a quick coverage of gold because I promised I would, and we didn't get a chance to look at it with Chris. So let's just talk gold here. So, gold to me, from a macro fundamentals perspective, I have not been more bearish on gold in a while. Now, then you might say, well, Nick, why aren't you short gold? Well, technicals look really strong. Sentiment looks really solid in terms of a contrarian bullish perspective. So I have a truly neutral view on gold, but if we were only looking at macro, gold would look super sus to me. Here's why. If we're looking at gold, we say, okay, macro-wise, what have we got? We've got inflation that's on the rise. So Fed rate cuts are going to get pushed back, right? Less rate cuts. I always say this is an easy way. If you want to understand, what do you mean? Inflation going up, isn't that supposed to be good for gold? Think about this. If inflation is hot, if it's high, imagine you're the Federal Reserve. You want to get inflation under control. How do you do that? You intentionally keep the economy slow for a little bit by keeping interest rates high. Inflation can get out of control and can destroy empires throughout history. That's how a lot of empires have fallen. Inflation they call it the empire killer, because inflation, the Romans dealt with this, many places. Inflation is disastrous for the sustainability of a currency, and an entire empire is built on a currency. So inflation being sticky is going to keep the Fed within the realm of, all right, we got to hold off on cutting interest rates. Cutting interest rates for gold is saying money printing. If you cut interest rates, more money gets flooded into the system. Borrowing is cheaper. More people go out and borrow money. That injects money into the system. If inflation is sticky, then we do not get those rate cuts. Gold doesn't get its rate cuts, it's bearish. Okay? That is how we can explain, okay, inflation bias is bearish for gold right now. We have had a round of sticky inflation. Meanwhile, what about economic growth? Economic growth, believe it or not, services PMIs, manufacturing PMIs, retail sales, and consumer confidence. Now, this may change in the next coming report, but generally, these things have been actually very strong looking. So growth metrics have been better than expected. That is bearish for gold. Gold likes chaos and an economy that's hurting. It doesn't like resilience in the economy. Now, you might say, well, if the economy is so good, what about the jobs market? Well, the jobs market data is bullish for gold. Why? Because the jobs market data has been poor, right? And we've been in this very interesting dynamic. I think part of it is AI efficiency, but companies have been hiring less and staying efficient, right? Companies have continued to see earnings growth. The economy still looks, on the surface, on the aggregate output level, still decently strong. Meanwhile, jobs data has been weak. It's a paradigm shift that we have not seen in U.S. history. Almost always, historically speaking, if you have a loss in jobs, the economy's going down too. Recently, at least for now, doesn't seem to necessarily be one-to-one. It's the correlation is breaking down, at least recently. So anyways, it is dystopian as anything, but companies are hiring less, making more. It's weird. It's the reality of the world we're living in right now. So I just wanted to share that. When we're looking at gold, why am I pessimistic on gold from a macro perspective? Economic growth looks solid. For the dollar, that is very strong. Inflation data looks sticky. That is strong dollar, weak gold. Jobs market data is bullish gold, weak dollar. 2 out of 3 of our metrics lean dollar bullish, gold bearish. Does that make sense? Now, again, technicals look good for gold. I wouldn't, try and combat this chart because the technicals look very solid. I'm not bearish on gold to the point of actually taking a short position. Fundamentals, a little tricky. Technicals, very bullish. Mixed bag, I can't touch it. That's the summary. There's no trade here for me because one says bullish, one says bearish. I'm going to pass. Does that make sense? Not to mention, there's other stuff that's just moving way cleaner right now, and gold is just chopping around. It's a chopping block because, again, you have uncertainty with the war, but you also have inflation sticky, interest rates rising, dollar strength. Those things are bearish gold. So we have a tug, we have a push and shove at the same time. So gold to me is maintaining a neutral reading. That's the breakdown on gold. I know there's a lot of gold traders, but I would encourage you, do your back testing on this. Don't just do it because I'm talking about it. There is, in 2026, there's enough tools out there to trade many markets. You do not need to, I know this is going to break some hearts and break some souls. People love to put, I'm a gold trader in their Instagram bio and only trade one chart. However, there is a case to be made that in 2026, with the right tools, if you are a macro trader, you don't have to trade one chart and just be reliant on that chart moving nice. You can trade the Dow, you can trade the dollar, you can trade gold, you can trade silver. If you have the macro understanding and the tools to actually weather the storm for each of those different instruments. If you want to check out the Edge Finder, if you don't have a copy of it, it can help you source what is going on in markets. By the way, look at the Australian dollar. What the heck? We have a 10 reading on the Australian dollar. Alan Perez, I'm looking at you. I know you're long the Aussie. I know you're going to love this reading here. My goodness, that is a strong, strong reading. Anyways, if you want to try out the Edge Finder, here's the link. Up next, we have got Forex James taking over the stream. He's going to fill in for Miko, it looks like. So we'll have him coming on and sharing some thoughts and ideas on today's markets. Guys, trade safe. It is wild out there. Of course, I'll have a video out later for more commentary, but don't go anywhere. You are in good hands with my friend Forex James. He will share some ideas, and he is a macro and technical trader as well. Stay tuned. He's coming in just after this. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello, ladies and gentlemen. How's everyone doing? Happy Thursday. Hope everyone's having a fantastic week. So I'm in a couple of different positions. So I'm still in, I was not still, I went long on the Aussie 200, which is the Australian index. So this is a little bit more of a speculative idea or more of a technical play. There are some slight things that back up this idea, but in general, it's a little bit loose, a little bit iffy. The only thing I'm not 100% satisfied with this position is obviously we've got a little bit of a risk sentiment idea in the markets, and we've still got the VIX, which is quite elevated here, sitting around 25. We've also got the RBA hiking idea, so it's not the most ideal position. However, I'm looking to see if we can just have a rebound off this 200 daily moving average, similar to what we saw over here. So it's a small position, $100 on the line, nothing overly crazy. Now, that's slightly hedged off here with a Russell short. So yesterday we were discussing the Edge Finder reading bearish on the Dow. Now, I wasn't willing to trade the Dow just for some position sizes with my broker. It was a little bit too large, didn't want to risk that much. So I went sort of by proxy onto the Russell, which was on the Edge Finder. Yeah, so the Russell's also getting a bearish reading, whereas the Dow's actually dropped off. So the Russell's now -6, but again, low risk because I don't really like to short the indices markets. I find it generally a little bit tricky. So yeah, we'll leave that one there. But again, in terms of technicals, very, very simple bread and butter stuff. Got the high, bearish leg here to the low, draw the fib from the high of this leg to the low of the leg, price pulled back into the fib, had a little bit of a break above, closed back below, and this was where I entered into this H4 downtrend with the Edge Finders reading. Not sure if you guys heard that. My cats seem to have done something outside the office. Moving on, pound dollar shorts. We discussed this one yesterday as well. So yesterday I was saying that I wasn't overly interested in pound dollar. That very quickly changed as the Edge Finder flipped. I think it was sort of midstream. It might have even been before. I'm not 100% sure. But I wasn't overly interested in pound dollar. But the Edge Finder's reading, well, actually decreased technically because it's a bearish reading. So that got me interested. We got a very nice technical pullback, technical entry on this pullback. So what we have is a level of what kind of was a little bit of resistance. It's a bit iffy, not super, super strong, but we can see a bit of resistance through here, used as support. We then had this bearish leg that broke below, retested here into this fib level within the bearish trend, tested a 200 moving average and continued lower. So I'm just looking to ride this one down. No real target. I'm just happy to trail stops on this one. I think the US dollar does have a little bit further to go. We are seeing a bit of outperformance over the past couple of days as well. Now, what do we have next? Euro dollar. So yesterday, I showed you a report by MUFG, so an institutional report saying that MUFG were also short euro dollar. It's also a bearish reading on the Edge Finder. So I decided to split a bit of risk in between euro dollar and pound dollar. So this was the idea. I was actually in a smaller position yesterday, closed it for a small profit and decided to actually scrap the DCA idea and just go in for a flat swing trade with a stop loss and take profit level. Silver is pretty much the last one. There is one other one on the Aussie New Zealand, which I'll go over after. So we were looking at silver yesterday as well. I wasn't, and I'm still not very happy with this trade. Although it's in a bit of profit, it's definitely not the best trade to be in my opinion, because I like to pair macros with technicals. That's kind of what I do. You know, as you saw, pound dollar, euro dollar, the Russell. Silver doesn't have a reading on the Edge Finder, meaning that there isn't a real fundamental kick. You know, it doesn't have that sustained fundamental driver behind it. However, I couldn't really ignore the technical setup here because it's bread and butter, as I've said before. It was almost perfect. So we came into previous level of resistance. So obviously we had the break, retest of this level, came into the H4 200 moving average, also rejecting the 50% fib level, and then had a bit of a reaction off here after this cluster of wicks to the downside. So I went in, I'm already risk-free on this position just in case it does reverse. Again, it's not a fundamental trade, so I don't want to be in it if it starts reversing, because if the technicals break, then the trade's done. It's not like a macro trade where if the technicals break, you can still look at the macros and say, okay, well, we've still got something there. The Aussie New Zealand. Now, this one is actually more of an intraday trade or a day trade, not a swing trade. So the problem I've found with this market is it's not giving any entries on higher time frames. So if we just look at the way it's moving on the H4, there's been a few entry opportunities, but they're very few and far between. And I do still think this market can continue to run higher. So what I did was go down onto the 15-minute and just enter on a 15-minute pullback. It might work, it might not. $50 risk. I'm happy to take that little gamble on that trade. But yeah, that's it in terms of my open positions. So quite a few open things, but in terms of the actual risk on the table, it's very minute. So I'm happy to just sit and relax. Now, in terms of the pound Aussie, this is the last thing I'm going to say, and then I'll take a look at the chat and see what you guys are saying. Fundamentally, still very, very strong. However, there is now talks of a Bank of England rate hike on the table. So in terms of pound Aussie, I'm actually now looking or contemplating maybe going long. Now, not yet. It's not. I don't want to sit here and say I'm buying pound Aussie. I'm not buying pound Aussie just yet. But if we can start seeing some stronger fundamentals coming from England or the UK, we can see a little bit of a more solidified hawkish tone from the Bank of England, and we can start seeing some sort of technical reversal signs. So whether we come down to some weekly supports, daily supports, whatever it may be, maybe I would go in very, very small and try and get a DCA mean reversion idea running. Now, that's very, very tricky because we are in such an aggressive move to the downside. So I'm going to leave that there. But yeah, please don't follow that idea because it's very, very premature at the moment. Right, so let's see what you guys are saying. Christoph, hello. Sluggy, good to see you. Alan's in the chat. Good to see you, Alan. Oil's pumping. Yeah, oil's having a fantastic move. Let's see, where's oil? Right here. Yeah, really good move here. So it seems like Iran is going not just with obviously the violence aspect of war, they're also going with the financial aspect. So basically, the benefit that Iran have in this situation is they can strangle the US in terms of the oil prices. So we had NATO release, I think it was a 30-day reserve. And I think America's got some reserves as well. But overall, Iran's in a pretty good situation to drag the war out, whereas the US obviously will want to get it done and over with. So it's in Iran's best interest, really, to hike oil prices, drag the war out, and again, sort of strangle the US financially. So depending on how that develops, I do now think actually going long on oil could be quite a good idea. The only downside is the oil obviously has had a really, I mean, what price was this? So it was around 67. So we've gone up to almost 100 or 95, let's say. So still a very, very large move in oil in a very short time. However, the situation is not over. So yeah, long positions I think are valid, but I would be very, very cautious, and I'm not really sure there's an asymmetric risk here. So what I mean by that is in order to have a reasonable stop loss to allow for some volatility, allow for some headlines and whatever else may come without the trade just being wiped out, you'd kind of need something along these lines. And this is only an H1 time frame, actually. I've just realized. Let me go to the H4. So yeah, even worse really on the H4, because the stop loss would need to really be around here minimum, in my opinion. Upside, you could look for 120, 130 if things get pretty bad, maybe even 200. I've heard calls for 200. I'm not really in that camp, but even if we go back to the previous high, you're looking at about a 1-to-1 or a 1-to-1.5. I wouldn't be very happy with that, given the fact that it can reverse very quickly if we do get developments that obviously would counteract the market. Silver's looking good. Excuse me. Yeah, silver does look good. Technically, but yeah, again, there's just nothing on the hedge fund to support the idea. So I'm not very happy to sit in silver. If it does start pulling back, I want to be in, see that move. If it doesn't happen or it doesn't continue, I'll get out. How we look for exits on RTY, probably just trailing stops. So I think with Russell, there's a lot of potential to the downside. So it's similar to what we discussed on the S&P. Sorry, guys, doorbell. A lot of background noise for me today. So yeah, what we discussed with the S&P previously was there is a lot of room to the downside if the market really does want to take that turn. So I think target one could actually be pretty much where we are, around these lows or around this 200 daily moving average. A pretty near term, that would be an intraday short-term swing trade idea. Beyond that, I would be looking for around this 2300 level. I think that makes the most sense. But again, it really depends. It depends if the war starts escalating, we get more risk off, and so on and so on. And oil prices continue to climb, the Russell could fall even further. So I'd be happy to just trail stops, maybe take some partials down the road. But at the moment, I don't really see a reason to overthink it. It's just a case of trailing stops. So if the Russell comes now pushing lower, breaks this low, I'll happily trail stops to probably around break even, and just continue to do that as this market runs lower. Again, I am hedged as well with well, not one-to-one hedged, but slightly hedged in terms of the indices markets and risk appetite or risk sentiment with the Aussie 200. Anton, WTI long. Yeah, I do. Again, I like the idea, but I just don't think it's worth executing, to be honest with you. I think really, if you were, if you really, really wanted to get into oil, the best idea is actually just to go in for scalps and day trades. I think holding a swing position on oil could be a little bit risky. And again, the stop would need to be quite wide relative to where the target likely is if you target in the previous high. So the risk there, or the risk to reward, it doesn't appeal to me at all. Alan is on. Yes, I think Alan's on after me. Well, that's what the schedule says, but I've had to come on earlier, so I'm not sure if it is still Alan that's on after. Ball out. Hello. tea and crumpets have arrived. They have indeed. It's my daily schedule. Every day, tea and crumpets. Short ES on open. Yeah, we've got the open in 5 minutes, don't we? So let's watch and see what happens. I guess we'll watch the Russell open because I'm in the Russell. So we can go down to the 5 minute. In the meantime, let's just see what else is going on here. So Euro Aussie is getting a bearish reading. I think Euro Aussie I would prioritize actually at the moment over Pound Aussie. Not really for any reason other than the fact the Bank of England might be turning more hawkish. That's just a little bit of word on the street, nothing solidified just yet. But just in the meantime, I think I would be avoiding the Pound Aussie. New Zealand US dollar doesn't appeal really at the moment because it's only a -5. My threshold is sort of 6 below or 6 and above. The reason is just because when we've got a -5 reading, generally it's just going to take one data print to flip it back to neutral. So what I don't want to do is build a position and then it just flips back to neutral and then, you know, the trade idea is gone. Euro dollar, I'm in. Pound dollar, I'm in. Russell, I'm in. So China 50, same applies. No interest there. Aussie US dollar is tricky. So I saw Alan's either in or wanting to get into the Aussie US dollar. Now, I think it makes sense, but it really depends where you stand in terms of, again, that US and Iran situation. If you're expecting that situation to escalate and get worse, I would expect the US dollar to continue to climb higher. And then again, if oil starts coming higher again and starts printing new highs, how much is that going to affect inflation? Is that going to force the Fed to hold even longer? Maybe even look at hikes, depending on how bad that situation gets. So it depends. The Aussie dollar individually, though, I would still say is an absolute. It's dominating. It's a fantastic currency to be a buyer of. The other downside, I guess, is that those markets have already had massive moves. So you would really have to be a bit patient to find a good entry. Do I still use PMT? Nope, they banned my account. I'm not going to get into that here, but yeah, that was fun. If catches a bid, then we might take this back up to 68.29. Are you talking about the S&P? Let's see. 68.29. Yeah, it's quite a large move. Excuse me. I have a position opened already. Wow, the chart's moving fast. Hold on, let me find that message here. I have mixed thoughts whether to close for a profit now or leave it with the risk of losing what I already got. Well, Ted, this is why it's important to know why you took the trade. If you took the trade just for a technical reason, you've then got to ask yourself, is that reason still valid? So for example, if you bought off a fib and you're trading the trend and you're just following moving averages, essentially, is that trend still valid? If it is, why would you want to close it? If you're trading fundamentals and the technicals changed, okay, well, how severely have the technicals changed? Are the fundamentals still strong enough to support the trend in the longer run? Can your position hold for that long period of time to let the fundamentals continue to play? So again, it really varies on exactly why the trade was taken. Generally speaking, I would say let the trade run, but again, it really depends what position you're actually in and why. Where's this volatility on euro dollar coming? It seems like the Iran situation has seen a little bit of a, not an escalation necessarily, but it's seeing volatility in the market, or it's giving volatility in the markets. Iran's supreme leader, Iran will not refrain from avenging the blood of its martyrs. Yeah, that's the other thing. We've got 30 seconds till open. So the Iran situation is interesting. So basically the US is offed sort of the candidates that they may have wanted essentially in replacement. What they've ended up now with is a guy or the son in power. Bearing in mind, they kill, I'm not sure if I'm allowed to say that one stream, but they killed his son, I think it was, his girlfriend or his wife, and his father, and he's new in power. Would you let that go? Probably not. I wouldn't let that go. I'd be out for blood as well. Bearing in mind, he's now also got to sort of prove himself politically that he is worthy and he's got a backbone to stand on. So in my opinion, I don't see this just disappearing. Edgefinder Squad for life, absolutely 100% I agree. Get the free momentum model guide. Yes. So if you are interested in learning the way I trade, which is momentum, so fibs, trading the trend with the Edgefinder, I made a 100% free course. You can get it with that link in the chat. It goes over things like how to find a trade with the Edgefinder. It goes over the central bank probabilities, the sort of trade discovery process, then applying the technicals and actually executing the trade with risk management applied. Again, 100% free. There's nothing to lose by getting that. Edgefinder is so cool. It is indeed. Genuinely changed the way I trade for the better. The way I used to trade was a lot more complex. I'd spend pretty much every weekend looking through all of the financial tools. So other companies, things like trading economics, I'd have to put it all together myself. I've had an Excel matrix. I had to input all the data manually. Such a pain. Edgefinder has literally saved me probably 12 to 20 hours a week of work, and is very accurate as well, which is fantastic. Seems like the S&P is heading to the downside, which is nice to see what the Russell's doing on the open. A little bit of a move down as well. However, not a huge amount of interest just yet, but yeah, we'll see how that continues throughout the session. On a different level, it is, yes. Nick and the team have done an absolutely phenomenal job with the Edgefinder. So looks like silver might be a break-even trade, but again, it wasn't a huge position anyway, so it's fine. Pound CAD. So Pound CAD and Euro CAD were on my watch list when we first saw the escalation with the US and Iran. I kind of got rid of the idea temporarily. I'm starting to quite like it though, again. So because we've got oil prices starting to rise, it makes me wonder, or not makes me wonder, but it makes me interested in the idea of going long on the Canadian dollar and obviously short on a weaker currency. Now, Pound CAD, I've just remembered, actually, the Bank of England might be hiking rates eventually, so maybe not this one, but Euro CAD's also applied. But if we can look for some sort of pullback, so again, I'm actually going to pull up Euro CAD just to show you it's pretty much the same idea. The only thing is we need a significantly larger pullback on this market, whereas Pound CAD seems a little bit easier to potentially get in. So a pullback, obviously long the Canadian dollar based on the oil increase. This could be quite valid. Let's see the fib here. Yeah, so this would also line up quite nicely with the 61.8 level on the fib. So it'd be a fantastic break of this structure here. Structure here, break here, and then maybe a retest into the fib, continuation lower, also could meet the 200 moving average. So we'll see. But that might be a little bit of wishful thinking. Trading on metals has been very hard recently. It has, yes. I think it's mainly because if we look at the yields have been coming up quite nicely. The 2-year yields, 10-year yields are up. We've obviously got the US dollar that's doing quite well. The Australian dollar is doing very well. The value of oil increasing has also caused this global inflation idea that central banks are going to have to stay on hold. So gold just isn't in an environment where it can trend really well at the moment. Thank you kindly. It's genuinely the coolest thing in the world to see traders benefit from a tool we've made. That's the way. Yeah, it's really nice to see all the support for the Edgefinder. Really, really cool. Okay, so ladies and gentlemen, it seems like Miko is here to come and take over the show. So guys, have a fantastic rest of your days. I'll see you all very soon. Stay safe, don't get margin called, and I'll see you all tomorrow.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edgefinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edgefinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edgefinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap.
That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Okay, what's up people? Good to be back. Hope everyone is doing well. As always, we'll go through a bunch of different markets, different charts, different time frames. We'll take a look at any positions I'm trading at the moment, what I have my eye on, and potentially what looks warming up for next week as well. And if there's any particular markets you guys have any interest, want me to take a look at, or a certain time frame on a pair, let me know as well, and I can definitely take a look. But I had a position coming into this week on dollar CHF, which is not really going too well. Momentum's not really picking up as I wanted it to. I did take a short last week. My entry was around here. The idea was that dollar CHF has been pretty bearish for a while. We've broken through major support, and the idea is that if we can stay below, there's a good chance that price will reject highs, at least push the 50% of the range. That is my first target for the trade. Now, if things go well, there is a good chance we could potentially push to the low and maybe even break out as well. But USD has picked up a little bit of strength, so I may look to close this trade on Friday before the weekly candle does close, because if the weekly candle does close and break resistance, it kind of does put an end to my thesis, because the idea of the trade was that we're maintaining that resistance. You can see last week's candle, very, very nice wick to the upside. In fact, the past 5-6 weeks, just consistent wicks in this area. This weekly candle does at the moment put an end to that. So if we do close well above that level, I will back out of that trade, potentially look for re-entries if we do maintain resistance again going to the next week. But at that moment, the trade is not going to plan. So we'll see how that does develop. It is only Thursday, things can change, but at the moment USD is a little bit strong. We're not really seeing that rejection that we were seeing from last week, so I might have to exit early. And then I did enter also a Aussie dollar position, which actually goes against that idea, because with this one I'm selling Aussie dollar, so I'm actually expecting, or at least hoping for, USD strength. And this was a bit more mean reversion. Dollar CHF is more trend continuation. Dollar CHF has been trending down for a while. I'm kind of looking to exploit that. Aussie dollar has been trending up for a while. I'm trying to look to see if I can go against that. Now, the idea is not necessarily just a hedge. The idea, it was just because we had another good opportunity that fit the criteria. As long as it's valid and I'm not overexposed to one currency, I will look to take the position. And in this case, price was trading at highs. We failed to break the highs. I got in yesterday on the 4-hour chart, and since then we've seen price slowly roll over. Now, this trade I'm not looking to hold for a long time. In fact, depending how we close today, I might even exit today, to be honest. At the moment, momentum looks like it's picking up pretty well in my favor, but again, we've still got the rest of the day left. Things can change. But if today closes well, nicely and bearish, then I will look to hold through Friday. And then no matter what, I'll probably look to exit by then, because this is not a trade which I'll look to hold for continuation, because I'm expecting a trend to continue, or momentum to continue. I'm going against the grain. So the idea is to exploit that reaction at the highs and then take my profit and run. So we'll see how Aussie dollar does progress. So far, looking okay. Hopefully we can get a nice reaction on Thursday, and if so, I'll look to hold tomorrow as well. But that's really the only markets I've been trading. I've been eyeing up gold as well. I've been looking for some momentum to pick up, but we just haven't really seen that, to be honest. So gold has just been one I've been keeping an eye on, but just making sure I'm being very, very patient before jumping in, because I still like gold. Price action wise, fundamentally, I still like the chart. Of course, we're not in the same situation as we were over here. You know, we have to trade gold differently now. Here was kind of momentum, breakout plays, quick break and retest plays. In this situation, you're looking for slightly deeper pullbacks, or you're being a bit more patient before you do take any breakouts, because we're not as bullish. The market's not exponential anymore. We're not really in an aggressive bull cycle. So you have to trade it differently because the market's going to reward and punish different trade ideas. So the idea of what I'm looking at for gold is to see what we do at this level this week, which we kind of just traded back and forth. No real force breaking through that level, which basically was going to be my trigger. If I could see real force and real momentum pull away from this area, I'll be happy to look for pullbacks and some buying opportunities, but we just haven't seen that this week, so I've stayed away. But of course, maybe going into next week, maybe momentum does pick up again, then I'm happy to look for longs, and this becomes my next big target. And then I'll be looking at the all-time highs, which are not too far away. So still very bullish on gold, still want to be a buyer, but just price action and more importantly, momentum is not really allowing me to do that. And then looking at some other metals, silver, platinum, not the biggest fan of those, to be honest, just because they're quite flat. Then some ranges on the daily chart. We've just gone from a very aggressive bull cycle. We had this massive sell-off, and now prices sort of finding equilibrium on the higher time frame. So in terms of looking for breakout plays or, mainly breakout or momentum plays, conditions are not exactly optimal. So I'm being a bit more patient here with silver. Effectively, I just want to see this high go. If price can break through that, that would be a meaningful break. And there's still a lot of distance as well. You don't necessarily have to be the first one into the trade. If silver is going to form a higher low and get back to all-time highs, this is still a very, very big move. So, if that momentum is going to pick up, I don't mind entering a little bit later when things are a bit more assured. So, yeah, silver's keeping an eye, other than that, in a range. So, being a bit more patient with that one. And platinum, which I'm being eyeing up as well as of late. Pretty much same situation as silver. Excuse the rough drawings there, but same situation. Price has been very flat in the range. We almost did get a break. I was eyeing up this, but we had a very aggressive sell-off the following day. So since then, again, very, very neutral. So in terms of the metals, keeping an eye on gold. Other metals not really doing it for me. Those are the only three that I look at on a weekly basis. In terms of the other majors, which I didn't go through, Euro USD, Pound USD, I was eyeing up some buys at the start of the week, but I missed them, mainly because they happened very, very early on. London session, well, actually mainly Asian coming into London on Monday, had a pretty big gap to the downside there for Euro, found some support, nice push up. I missed that initial move, so since then, haven't been interested. I know we're revisiting, but the bias was just looking for a reaction of support. I'm not banking that this level is going to hold. So I'm being very, very patient here with Euro USD. In fact, I just want to see how this weekly candle does close, because last week's candle closed with some force, but it did provide a pretty aggressive wick at support there, which implies, okay, momentum was there, but we didn't really have enough to break support. We've respected it. This week's candle has gapped below the level, had a pretty tasty wick to the upside there, pretty big wick there. Now looks like potentially could close bearish. Of course, we still do have the rest of Thursday and Friday left, but let's say if we do close bearish, that's pretty interesting. I wouldn't, again, necessarily be looking for a complete sell-off here because there is some support to our left. But let's say if next week's candle opens up bullish, there could be some shorts again to take it back down. So that's something I'm keeping an eye on there for Euro USD. And Pound USD, the analysis is very similar as well. If we flick over to Pound. So again, last week's candle was actually a really big doji with a pretty big wick to the downside. So not much momentum, but same situation in terms of we had a big sell-off, price retraced most of it, and then essentially held support. This week's candle, a little bit all over the place, not really giving us much information, small bodied as well, but wicks both sides. So really just tells me the market is in equilibrium to a degree. Buyers and sellers not really dominating too much. Of course, over the past week, sellers have been in control. In terms of what we're doing the past few days, this is just pure range behavior. So if I was looking to do anything, it would be looking to either sell at the highs or buy at the lows. Anything in here, I wouldn't touch. That's just not really any area of significance. I wouldn't look to bet on any buys from that area. So Pound USD, I'll treat more as a range. Euro momentum's picking up, but I'll see how we close on the weekly chart. But in terms of ideas, that could be interesting, or potentially that could be interesting. Of course, we'll see how we actually get there and how we react before justifying those ideas. But those are the locations which would interest me. Anything else, not really. And in terms of dollar CAD's been interesting. I'm still pretty bearish with this one. I like how we closed last week's candle. Minimal wick to the downside, big rejection to the upside as well. So I'm still looking for us to come back and test the low of this wick here. And now we've pulled back into an interesting area. I do think we can be looking for some sells. It's not quite there yet, but anywhere within here, I do like that area for a short. Now, I'm not looking for any meaningful trades here with dollar CAD. I'm not necessarily long-term bearish. There's support right below us. The idea is that price could potentially come back and test support. Maybe we bounce there again. Maybe we break out. But the idea is that momentum is still pretty bearish from last week. I'm seeing if we can get the continuation of that. So keep an eye around 1.36 to 1.365 and some downside. And lastly, let's take a look at dollar yen as well. Dollar yen, very bullish, very bullish for the yen pairs as a whole. USD's picked up some strength. Yen's still weak somewhat as well. So we do have a pretty bullish market here. And it looks like we're probably going to see some new highs pretty soon as well. So again, if you're intraday, the bias would be looking for longs and just looking to keep that momentum up. So if we could see, I mean, that was a nice little dip there this morning. And it looks like momentum's picked up. But maybe if we could revisit on Friday, that still looks like a nice buy back to highs. Just playing what the market is rewarding right now, not looking to overcomplicate it. Momentum's still high. Yes, there's a big level of resistance. We're not looking for anything crazy. But that's what the market is currently rewarding at the moment. So that's the direction I want to be trading. And there's still larger, more significant highs we could be looking to push towards as well. 161.5 looks pretty interesting. Okay, let me go through some chats. Okay, we can take a look. I was looking at the same trade, dollar CHF. Nice. Well, I mean, the trade isn't playing out too well at the moment, but hopefully maybe something could turn around. But the funny thing is I'm shorting Aussie dollar, so if either one of those play out with a bigger reward than I risk, then I'm happy. But yeah, I'm going to see how dollar CHF does close by the end of the week. If we're not seeing that rejection anymore, I'm getting out that position. Yoshi, what's up? Skill-based question. What do you think of the importance of developing the skill to identify different market conditions, ranging, trending before entering position? I think that's crucial, my man. I think that's absolutely crucial. I think a big mistake that a lot of traders make is they treat ranging and trending conditions as the same. In ranging conditions, the market will reward and punish certain trade ideas, certain trading styles, and vice versa with trending conditions. You can't trade a ranging condition just like you would trade a trending condition. In terms of the characteristics, it's not compatible at all. Style, type of entries, breakouts, it just doesn't work, vice versa. So identifying what the condition is of a market, I would say, is just as important, if not more important actually, than your entry methodology and your exit methodology. Because in terms of pullbacks, it doesn't really make sense to trade in a ranging condition. It categorically just doesn't make sense. So to trade it in those conditions, you're just doing yourself so much harm and just no good. You can't even improve as well, because if you're trading in a trending condition and you're looking for pullbacks, you can get better at looking at pullbacks. You can see what performs well, what doesn't. But in trending in ranging conditions, if you're going to apply a trending strategy, you can't even learn just because it's not compatible. The results you get are not even useful. So yeah, I think it's imperative. And a good way to map conditions is keep it objective. Don't use visuals too much. Visuals is good, of course, but keep it objective. So for example, in a trending condition, you want to see at least maybe 3 higher highs and 3 higher lows. That's an objective truth. If price is doing that, you can classify trending. For a ranging condition, you could say I can stick on maybe like a 20 moving average, and if price crosses that 20 moving average at least 2 or 3 times, or let's say 3, then I classify that as condition as consolidating. And what that does is makes everything objective, so you're not guessing if it's ranging or trending, and then you can be a bit more consistent with your trades there too. But yeah, good question. But I think it's so important that you classify what situation you're getting involved in. In terms of pound yen, we spoke a lot of this pair last week. I said it's a pair which I'm looking for a trade. I didn't actually find a clean setup actually. It was just very, very messy, to be honest. It's one of those situations where it kind of did what I was looking for it to do, but it just didn't give me a good entry. Well, it did give me an entry, but the risk reward just didn't make any sense. Essentially, last week we were trading around here, and I said, okay, we've got significant support. Prices broke through that area, then we recovered. The idea for pound yen is that if we can maintain support here, there's a pretty good chance that we'll see a push back to highs. And what I like about pound yen is that we've been in such a consistent uptrend. So the way I see it, there's a pretty high probability chance that this is going to be another higher low, at least to go and test highs again. Whether we continue beyond that, that's a different question. But there's a good chance that we are just going to be putting another higher low. Not certainly, I shouldn't say that word. Most likely, if we can stay above support here. So the idea was, okay, this is our kind of a fake out of support. Price reclaims the level. If we can stay above this area, I'm looking for that to happen. And then I was looking for entries last week, but it was just really messy, just because price kept breaking back below, then back above, then back below, and back above. So it was just kind of a very awkward situation to find an entry. And then when momentum kind of picked up around here, which was actually just before the weekly candle closed, I believe, Friday. If I'm taking an entry here, my stop loss would have to be there, and the risk rewards kind of skewed, and my targets would be here. I mean, I'd probably still walk away maybe for 1-to-1, but preferably I want my targets to be a lot bigger than that. So it didn't really make any sense. I was kind of hoping this week that we came back for a retest, and then I can find a better entry with a better stop loss, and then profit on that and maximize my risk reward a little bit better. But we've just been pretty bullish this week. I mean, we still could roll over. It's a big if, but there's always a possibility, so I'll keep an eye on that. But it might be a situation where it's kind of left me behind a little bit. But anyway, pound yen, I do think intraday, if that's the time frames you're looking to trade, I think pullbacks make a lot of sense. Momentum's been pretty clear. Looks like support is still holding. There's a good chance we could push back to highs, and I do expect us to push back to those highs as long as we can maintain market structure in the next week or so as well. So very, very bullish on pound yen, and just looking at the yen basket as well, just to get a clear consensus on what the yen is doing relative to other currencies. This is still looking very bearish as well. So I want to be a seller of the yen. If I'm looking at pound yen, euro yen, dollar yen, naturally I want to be a buyer. I might not necessarily find a trade, but I know the bias which I want to attack. And the yen is just gone and broken through some more support. Yes, there might be a bit of a pullback at some point, but unless we see something drastic, maybe breaking the highs there, I would still keep that bearish bias. So yen pairs across the board, looking at selling opportunities. I will go through some indices to wrap up. We can take a look at pound USD. Like I said, for pound, I'm not a big fan of the price action at the moment. I think the market's still very flat. So in terms of opportunities, I would only look for maybe shorts at the highs if we can see some healthy rejection, or some buys at the lows. And this is not necessarily for like a bias, so to speak. This is more so if the market rejects the high, there's a good chance we could see at least a reaction. And the reaction is what I'm trading. I'm not necessarily suggesting price is going to keep falling, and likewise with support there. If we can respect support well, there's a good chance we can get a reaction. And that's the trading opportunity I would look for. I don't really have a clear-cut bias, at least from a technical standpoint, for pound USD, just because look at the price action over the past few weeks. It's just been up, down, up, down. So I don't want to be too fixed with a bias, especially in these conditions. If we were trending well, sure, but I mean, we have trended relatively well over the past few days, but the bigger picture is very, very noisy for pounds. So The idea is when things are noisy and things are just oscillating back and forth between an average, I just want to be looking to buy and sell above and below that, and just look for those reaction type trades. And when things are trending, then I can be a bit more aggressive, sort of similar to how I'm trading Aussie dollar at the moment. But yeah, in terms of the indices, they've been a bit rough past a few weeks. I mean, especially with Nasdaq and the S&P, which we can take a look at in a moment. But in fairness to US 30, momentum's actually been pretty good. Yes, the market is bearish right now, but it's actually been a pretty nice move. Pullbacks, lower lows, lower highs, pretty textbook stuff there from US 30. Nothing too crazy. Nice reaction at some resistance this week, and since then the market's been falling pretty well. So I quite like the price action there for US 30, and I would expect to see probably a bit more downside, but I wouldn't be looking for any meaningful short positions just because we're coming back into a significant low. So if you're short from up here, great. If you're going to be shorting here, it would just have to be a short-term trade in my opinion. I wouldn't look to try and hold on to anything more than a day, really, just because I don't really want to be shorting, especially an indice, after already such a big move coming back into some areas of support and demand. That's just a big no-no for me. So I'll be very careful there. Yes, the market is very bearish and momentum-wise looks likely to continue, but I just wouldn't be too over the top with that. In terms of Nasdaq, this has been very, very flat. I just don't see really any meaningful opportunity here until we come back and test support. I just would be very careful in this range. The price action has been absolutely awful there. Again, you can work your way around that. Some short-term trades, you're selling the highs, buying the lows. Just looking at those mean reversion plays makes sense. Anything other than that, I would be very careful. Any momentum plays, any kind of continuation plays, just don't thrive in these conditions. A big part of trading, especially in terms of technical analysis, is being aware of what the market is rewarding right now. These conditions, trending environment, you want to be looking for pullbacks. You want to be looking to trail your positions because the market is rewarding that. Here, you wouldn't be looking to try and trail a position, or at least not to an effective way. The markets are just too all over the place. And same thing for the S&P as well. Very, very choppy conditions. Momentum has just been stagnant. I mean, we are looking pretty bearish today, and I would suggest if we can get a solid break of that, there could actually be some nice downside back to this low. But again, that's as far as I would take it for the S&P. But yeah, momentum's picked up well today. We'll see how we close for the day. But yeah, we've definitely seen some momentum, especially as the US sessions kicked off there. A really aggressive candle. But to be honest, I'm just being a bit more patient with the indices right now. I'm not really looking to trade any of them, really. Maybe the Nasdaq, if we can push back to that support level. I actually missed a nice bounce at the start of this week, but again, we had a very violent gap, and then price reacted in the early hours of Monday/Sunday there. So not really in my trading hours. But if we can revisit this maybe next week, I'll see how we react, and potentially I do think there can be some nice opportunities, short-term buys to catch a reaction off that low. But just not a big fan of the indices right now. Markets have been quite flat. And to be honest, for the start of the year, I haven't really seen many big movers, to be honest. So I would say I'm being a bit more defensive right now. But yeah, currently I'm short Aussie dollar and short dollar CHF. Dollar CHF I might look to close by the end of the week if we don't maintain resistance. Aussie dollar's going pretty well, so hopefully we can close. Maybe as a nice bearish engulfing for today. Then I'll see if I can hold that to Friday, and then probably I'll just close on Friday no matter what, really. This is just, it's not a trade which I try to hold too much, but that USD strength's coming in. We're seeing some nice momentum, so we'll see how that goes. And yeah, dollar CHF, that weekly candle closure is going to be interesting, unless we have a very bearish Friday, which I'm not too sure we'll see. See if it's going to hit my stop, or I'll close it wherever the next available price is. But yeah, those are my positions. I'll keep an eye on gold. I still do like gold to the upside. It's just not rewarding that right now. Momentum's not really picked up just yet. So as soon as I see momentum pick up and especially break resistance, then I think we got something meaningful in our hands there. And then targets that high, but mostly trading stops. So yeah, that's kind of where my focus is, and we have come up to the end of the segment, guys. Hope you have found the analysis useful. If you have, feel free to check out my channel. I'm pretty sure the team have dropped my link there. Yes, they have. So check it out if you want to see more of this analysis. But thank you so much for having me. Have a great Thursday, guys. Rest of your trading week and a great weekend. And I'll catch you all next week, guys. Take care.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Oh my goodness, did I forget to share my screen here? Let me see. 1 second. Entire screen. There you go. Should be on there. Oh, should be on there now. Okay, awesome. My bad, guys. Here. Okay, awesome. We're good to go here. Let's go ahead and start talking about these markets here because there's lots to talk about. You're getting another pop up in oil there. We'll see how long that is sustained. Not good for my position, right? So my Aussie dollar position here is still green, right? Obviously, this is a strong trend here, but we are getting a little bit of a pullback. So congratulations, Miko, on that front. Awesome stuff. But I do like the overall story here, Aussie dollar to the long side still. I was checking the edge finder here right before this stream. And we are seeing, if I just go to the top side of this page, some very, very strong reads there for the Aussie. You see the Aussie basket as a whole here. Very bullish reading there all the way up until the bullish AUD USD. Yesterday was not bullish. It has now flipped bullish there. So a strong currency nonetheless. It's doing really well. The other position, so I went long AUD USD. That one's pulling back here. But then I also went long Aussie CAD and Aussie Swiss. Aussie CAD here is pulling back as well. And Aussie Swiss is still up there a little bit elevated. So good stuff to see there. The reason why I think that the Aussie dollar can continue to go higher is obviously the strong fundamental backdrop. If you go to the COT data history and you just look at the Aussie, you can see like this yellow line here is that percentage long. You can see that it's been trending higher. So there's been a lot of accumulation going up for the Aussie as well. But also too, I mentioned this in a comment as I was watching the stream this morning, there were talks and right now, as of now, the Strait of Hormuz, which is the big problem, right? That's why you're seeing yields higher. You're seeing oil higher. You're seeing, this inflation prospect, all that good stuff. The reason why the Strait of Hormuz is not actually closed, it's closed to everyone, but Iran's allies. So you have like China, Russia. Oil is still flowing to them, right? China is getting about 1 to 2 million barrels per day or whatever. They have about 3 to 4 months supply of oil, right? So essentially what's happening is China is buying that oil. It's a Russian ally. And Iran is now being able to collect income and support and go ahead and continue to fund their portion of the war. So that's what that dynamic is happening. Now, where does the Aussie come into this? Well, the Aussie dollar is one of the biggest trade, or China is Australia's biggest trade partner. And so indirectly, consequentially, you do get Aussie benefiting off of China's gain here when it comes to oil. Now you also have other things, right? When it comes to the global inflation story, you have higher yields. And so, central banks now, in order to fight that elevated inflation or the prospective inflation elevation, you do have to go ahead and hike rates. Now, hiking rates does not mean the same for everybody, right? in an economy like the Aussie dollar, where they're getting strong GDP numbers, things are looking well, right? Their unemployment rate ticked down lower to 4.1% versus 4.2. So if I go ahead and show you the AU economic heat map here, you can see that the overall health of the economy is looking strong for the Aussie dollar. So with growth elevated, you can still go ahead and hike rates, and it won't affect the Aussie dollar that much. It will make it attractive, similar to like the dollar, right? The dollar has seen good growth, good retail sales, all that good stuff. CPI was pretty much flat here this last print that we saw yesterday. The only thing is the labor market. You did get that bad NFP print, but then you also saw jobless claims today was a little bit better than expected. So you do have that versus something like the euro, where they're struggling with growth, and same thing with the UK, they're struggling with growth. And so what central banks like to do is when there's inflation, they try to stop spending, right? So what they do is they hike rates, and it makes spending more restrictive. People are buying less cars. People are buying, they're not buying houses. They're not going out to eat and stuff. Credit card interest rates, whatever, all that good stuff, right? Rates go higher. So they try to stop that spending, or slow down a little bit. If you hike rates in an economy that's already slow, that's not going to be bullish for that currency. It's going to make that currency a lot weaker, a lot less attractive. Versus if you hike rates in an economy like the US or the Aussie, where growth is pretty strong, it's pretty stable, that'd be a more positive effect than it would like the euro, the eurozone, or the UK. So there's nuances here when it comes to trading currencies, and how interest rates are going to affect everyone. The argument that you can't dispute is higher inflation is going to happen, right? If oil stays elevated for a very long time. And so basically the chart that will answer all your questions here would be yields, right? Looking at the short end of the curve here, the US 2-year yield, it is elevated, right? You're higher, you're trading higher than you were yesterday. The 10-year yield as well. Yields across the globe. Look at the Aussie 10-year yield, right? It's just making new highs here. Kiwi is also making new highs. Eurozone, all highs. Like if you go down the list, yields are going to be higher, right? So it's just understanding, okay, one, is global inflation happening? Look at yields, yes. The second question would be, okay, how does that affect the specific currency that I'm trying to trade? And so as long as you understand those two questions, I think you'll be pretty solid in this environment. Now, obviously, it's a lot to go through. That's why you have the Edge Finder here. That's why you have the top setups. That way it calculates all the data points that affect the currency strength or weakness, like your GDP, CPI, PPI, PCE, interest rates, all that good stuff. All of it is done automatically there. And so you don't have to go ahead and do all that homework. You can just see, okay, you just go to something simple like go to macro scanners, equals to price index. Okay, who's doing good, who's doing bad, right? US dollar is doing good. Okay, pound doing bad. That hence the pound dollar weakness, right? You have Australian dollar doing very, very well. You have that Swiss that has been doing pretty bad. So it's just that simple, right? You don't have to overcomplicate it, but just ask yourself those two questions, and I think you'll be doing good. But as far as managing the trade, I'm sure you are wondering, like, what am I going to do, right? Aussie dollar's down 0.70%, right? Well, it's just a pullback in an overall uptrend here. So it's not nothing out of the ordinary. So I'm not like scared or anything like that. You have a strong, very, very bullish reading here for that Aussie basket on the Edge Finder. So that just makes me, very, very much, convicted on the trade. So I'm just going to go ahead and keep the position. I did say that I'm going to let the trade breathe, and I'm going to go ahead and do that here. Now, obviously, if you see something that annihilates the whole story, and it's just like, like, for example, the FBI warns California supposedly that Iran was looking to go ahead and put drones into the U.S., right? For the whole war, we've been pretty much attacking Iran on that front in the Middle East, and they've been attacking us in military bases on that region. But if Iran somehow successfully lands a drone onto the U.S. mainland, then that will obviously be a bigger problem, right? The dollar in itself has been doing pretty well for a couple of reasons. For one, U.S. mainland is pretty much protected. We have the strongest military, you can argue. When it comes to oil dependency, we're pretty much independent on that front. We do have trade partners for oil, but for the most part, like, we can sustain ourselves. And it all matters, like, relative, right? Relative to other countries, we can sustain ourselves for a little bit. So you have those things, right? If you start to see U.S. mainland trickled. If they're successful on that front, then that obviously creates more problems. And then, maybe you don't even see people going into bonds, U.S. bonds, right? There's a flock elsewhere. So if you see something crazy like that, then obviously that will deviate me from the trade. But for now, like, the fundamentals are strong, edge finder strong reading. So there's no reason to go ahead and exit the trade. If you guys want to stay updated with things, obviously revert to your edge finder. It'll save you here, but also to the Telegram channel is completely free. We'll go ahead and drop the link here in the chat. It's free value. I go over the best charts of the day, the ones that are most imperative to know, just to guys keep you updated. So if you see here for the dollar, today, the dollar daily, right? I basically highlighted the possibility of, the technicals, like, this thing has failed various times. There's a possible to breakout, this and that, the drivers behind that fundamentally. So although it's not a direct trade signal, like, if you read this stuff every single day, and you start to form like an understanding of like what the context is of the world and the charts and all that good stuff, then you can make your own educated decision on if you see a breakout to this thing to the upside, then you can participate, right? Or if you don't, or if you see a fail this level, then you just stay out, right? So this is not like trade signals, but I try to make this somewhat neutral as far as directional bias. But I also love to give you the best stuff that makes a lot of sense, that is pretty much close to acting on. So when it comes to the dollar index, I'll give you my personal opinion. You are getting this level here tested, this 99.500 level. It has been rejected various times. You get these strong wicks here to the downside. However, this time looks a little bit different, right? You got this pullback here. If you get a complete, pop into this, a solid break above, then yes, dollar index, the path of least resistance is to the upside, especially if you see these yields stay elevated, right? So the next level to target, that next level of resistance will be that 100.2, 100.5 area, somewhere around here. And so if you do get a pop there, you best believe that I'm looking to go ahead and long this thing and target this level here, right? So that's the beauty about, being up to date with the macro, the charts. Again, I give you guys the best charts that I can possibly find, the ones that are that you have to know within this environment. So that's basically my plan for the dollar index. What that would look like if I do want to go along that dollar index, I'll go down here to the euro dollar. I'll go down to a 4-hour time frame. If I put a fib from that low to this recent, or from that high to this recent low here, I would look for that 38.2% retracement. So shallow pullback, looking to participate. If we somehow find our way into that 1.1500 level, then I'm like to go ahead and short that euro dollar, and that level that pretty much corresponds with that dollar index 100.5-ish would be on this chart here, would be the euro dollar. It would be something like this right here, 1.1400, or even you can even take it up if you want to be a little bit more conservative, because we are chasing price a little bit here. It will look like this, that 1.4800 level. So nonetheless, a trade I'm willing to take if you start to see a very strong follow through with that dollar index. US is pretty powerful. Don't think Iran drone can touch American soil. Yeah, I think so too. Sorry, I was pretty close there. Yeah, I think so too. But anything can happen, I guess. You do have us being very close to Russia on that side of things. So I don't know if they use that. I don't know. I don't know, right? So I'm not a military strategist or a war strategist by any means. All I know is that if you do get a successful hit on U.S. mainland, that will obviously cause a big disruption. You can't doubt that. And that will deviate me from a lot of trades, and I'll have to repivot there. But for now, I don't think that's probable. That's just my personal opinion. U.S. is pretty solid when it comes to military and stuff like that. So we'll see. We'll see. How's CAD Swiss looking fundamentally? I would assume CAD Swiss is doing strong here today, especially with this pop of oil that we've seen. And the Swiss basket has been pretty weak as a whole for a good couple weeks now. So CAD Swiss, yep, there you go. This was an L that I took some time ago. CAD Swiss, very, very strong here. I would say from a technical basis, this is a level of what you could say resistance here. That's that 200-day moving average. So we'll see how that lines up. Very dependent on oil. So I think CAD will be the main driver here. If you do get a suppression of oil prices, then this thing would just pretty much reject this 200-day moving average and trade lower or mean revert, right? If you see a pop in oil and you see this thing follow through, then upside potential, it looks pretty healthy. Not gonna lie. Someone shared a chat about from Kick. Okay. Gold is dead, man. There's better charts out there. I mean, you're getting a pullback here. Gold, you're getting a pullback, but I mean, there's a lot of things. There's a lot of things that can disrupt gold. And I have Marco. How you doing, man? If you want to help me here with this, if you want to help me out with this question here about gold,
yeah, sure.
I think gold is like, I mean, it's a possible trade. It's just that you're not seeing the stars align on it just yet. So, your take, Marco.
As far as gold goes, let me take a look. So it's been flat. It's been super boring, if I'm being honest. We are at a 20 MA, which is nice, and we have the uptrend on the daily chart. Long-term fundamentals are bullish, so you're still getting quite a lot of uncertainty in the world with Trump being the president and everything. And you have seen a lot of buying of gold in 2025. The market conditions are still pretty similar to 25, so you should see that in 26. Of course, the latest disruption, the US and Iran war, kind of messed things up, and gold actually sold off on the news. But long term, I would be pretty happy to own some gold. What I'm personally looking for is, I'm looking for a bullish reading on the edge finder, of course. So right now it's neutral, which means I'm going to have to wait. The entry does look nice, but I'm going to have to wait for that clear bullish reading from the edge finder. So that's kind of my take on it.
Yeah, I agree. And too, like I said this earlier, but the chart that's going to answer all your questions, like yes, oil is elevated, but the reason why markets are trading the way they're trading is because you see yield higher, and not just US yield, but global yields higher. And at the moment, like when it comes to that story, you are seeing bonds getting a very bearish reading, or a bearish reading -8. So, as long as you continue to see that, and for those that don't know, bond prices trade inversely to bond yields. So if you start to see this bearish reading even get worse from that, or it's just a bearish reading in general, then yields are most likely going to trade higher, and you're seeing that within the price as well. That's going to just make gold not that easy safe haven trade that we once know and love, So that kind of just throws a wrench in there.
So the relationship is, if I'm not mistaken, if the bond yields go up, they make investing into both bonds more attractive. So essentially it takes away capital from gold. Is that correct?
Yes. Like people will, because you can get yield, higher yield within like the bond, like in itself, like, or the dollar, right? So that's how like the whole real yield thing is, like, money flows into that higher yielding currency. Bond is traditionally a safe investment as well. So yeah, that's how that affects gold there negatively. So as long as you see yields higher, gold is not gonna like that. Now, gold is actually holding some relative strength. It's been trading around here above this level here. So in my personal opinion, if you start to see a solid drop in yields, then gold recoups that safe haven king status. But as of now, that's just not the case.
Yeah. And so what do you think at the moment, if I open up my financial juice, so, and I go to market moving, let's just quickly go through it. So US makes a lot of money when oil prices go up. Not so great for the end of the conflict. Then you have this FBI thing, which I think is just totally insane. Like, no, drones are not gonna come out of Iran to US. The range is just too far away. And then you have Trump, practically nothing left to target in Iran. War with Iran will end soon. So you're getting, and then you have Trump, it's possible I could talk to Iran. Essentially, you're getting conflicting news. But if you had to pick a side, would you say de-escalation or escalation? Personally, I would say de-escalation. Because if I'm looking at Trump's reaction, what happened after this weekend. So essentially, oil prices going crazy, and him immediately going to the press and saying most of the targets are hit, objectives may be completed, war may be over soon. So I think there's a clear correlation between the markets going wild and Trump doing a taco. So I personally think that we are headed for a de-escalation, and I'm positioned that way. I have a long on the Aussie dollar. So what about you? Because you're probably also positioned on the Aussie, you probably have a similar opinion to mine.
Yeah, I would want de-escalation, but I also think that it's a possibility that, it's in the US's interest to end the war as soon as possible, and it's Iran's best interest to prolong it as long as possible. I don't know which one will outweigh the other. I think there's going to be real consequences to Iran too if this thing stays prolonged for a very, very long time. They did say this morning here on Financial Juice, the Iran Supreme Leader, the new one, the son of the deceased old one, he said that the strait should remain closed, and that it should be the closure should be a tool to go ahead and pinch the enemy essentially.
Yeah.
I think there's real consequences to either or. I mean, each one wants a certain outcome. I would hope de-escalation though. That's what I want. And if I were to bet on something, well, right now, if I were to bet on something, the price is telling me no de-escalation. But I want to bet on de-escalation.
Interesting. Yeah, if I cut through all of the news, I would say overall we are headed for a de-escalation. But the risk is, of course, that there's no escalation in the sense, but a prolonged sort of closure of the strait, which then further disrupts oil prices. And as long as the strait is closed, oil prices could keep on grinding higher, thus putting pressure on the whole market. So you don't even need an escalation. You just need the closure of the strait to remain permanent, and you're going to get some massive issues in the markets. So that's a good point. Also, before we continue with our joint segment, I just wanted to put the link to the giveaway form in the comments. So if you want to participate in the DNA funded giveaway, it's a 5K one-phase account. Go to the comment section and click this link or copy and paste the link, fill out the form, and during my segment, I will be doing a giveaway. So just wanted to put that out there. I do have a long on the Aussie dollar. Looks like today we're going into an escalation phase, or kind of the markets are going into more of a risk-off phase. So the Aussie dollar seems to be selling off. I'm still pretty happy with the position. I heard your segment. You're pretty happy as well. So what would be the game plan? What would make you want to put your stop loss at break even, or possibly even close the whole position? Is that a scenario? And what would warrant such a move, let's say?
Yeah, I would still look to or not somehow, but I would still look to close out of the position over the weekend, just because you have a possibility of either or. But also too, what allows me to stay in the trade. Now, this is just a pullback. Like if you put a fib out from like this recent leg higher here, we're still looking pretty healthy. Like we're barely at the 38.2% retracement level. So like if you're if you're aggressive with the trade, which I'm not, but if you're aggressive with the trade, like this would be in a normal situation for me where I would like add to a position or something, right? If the confluences are there, you're getting a strong bullish reading, which now you're getting a very, very bullish reading on Edgefinder, which is keeping me in the trade. Things like that, right? These overall dynamics align, then this will be a time where I would add the position. But because you are playing under riskier conditions and uncertain conditions, then I'm not going to add to the trade, obviously. But I still think that the trend is intact to the upside. So depending on the price action on Friday, most likely I'm going to close, and then as long as nothing happens over the weekend, then I just re-enter the position, which will be pretty much near to where I closed out at, and then I continue the trade on. But we'll see. Now, if we somehow close way above this level here, then there's no reason for me to do that. I would just trail stops right below this structure here, like this little breakout that I was looking for, this 71.5, and then just let it ride there to the sunset. But I'm happy to hold the trade. Obviously, I would love to hold the trade by trailing stops because I'm getting positive swaps as well. So that helps me out in my favor. So for those that are unsure, let me go ahead and show you here. It's going to be under carry trade scanner. Anything with AUD to the long side is giving you some pretty good, healthy, positive swaps. So adding the three positions that I'm in together, I'm getting 5.52%, which is pretty good there. So I do want to hold it for longer, but again, if the price action is pretty much subdued here, I'll probably just close it out, re-enter next week, and then continue from there.
Cool. And you have the Aussie Swiss as well, if I'm not mistaken.
Yes.
I do really like the Aussie Swiss idea. Not only are you betting on the strength of the Aussie, but also if you get the intervention, it could be a pretty nice play. So let me bring up Aussie Swiss. I mean, the price action looks super strong. So maybe waiting for a pullback. For me personally, to get in, I would wait for a bit of a pullback first. So let me put an alert. But if you get that intervention, which I mentioned yesterday, I believe, on the Euro Swiss, where the 0.9 level seems to be heavily defended and will most likely warrant a larger intervention from the SMB, it should bleed into all of the other Swiss pairs, meaning Aussie Swiss could really benefit from it. So that's why I really like the Aussie Swiss position, and it's something that I totally forgot, and I just focused on the Aussie dollar.
Yeah, if for playing that intervention play on the Swiss National Bank, like going long the basket, definitely helps a lot, because one, what it does is it helps solidify that yes, the Swiss franc is actually the one, that's in this case would be weakening. But like if you were to go along like only one Swiss pair, then maybe you just have that like maybe it's just the euro really doing all the work, and you're not like really seeing that Swiss weakness there. So that's why I like when it comes to like this Aussie trade here, I wanted to go along the basket because I wanted to actually solidify that the Aussie dollar is getting really strong. And what it also allows it to do is it kind of like diversifies a little bit the risk, because I see someone in the comment here, I love Aussie Swiss, but I don't like Aussie US dollar. And I agree. At the current moment, like right now, Aussie dollar is getting weak because you're seeing the dollar get a safe haven bid. However, because I'm going long, like at the moment right now, Aussie Swiss is holding the weight, because the Aussie is still strong, but Aussie Swiss is doing a lot better than Aussie dollar. So it kind of helps you like, I don't know, like it's a more like stable play. It's more solidifying that the currency that you're betting on is actually doing what it needs to do.
Yeah, and I'm looking at the Aussie Swiss. I'm looking at the sell-off after we opened this weekend, and it's minimal. I mean, the price is just holding up so well. The relative strength of it, if you compare it to let's say the stock market, where it just sold off during a massive risk-off event, Aussie Swiss seems to be holding up really well. So let me just see. This is Monday. So we gapped lower, but immediately filled it and went back up. And this was Monday again. We didn't gap at all, and we just exploded higher on a Monday. So the price action, I mean, you're getting bad news, good price, which is pretty good. So owning the Aussie Swiss is a pretty good idea, and you're getting a bunch of swaps, aren't you? Like super, what you showed us. Super
5.52%.
5.52. Oh, okay. That's pretty good.
Yeah, and
that's some extra income, definitely.
Yeah, and if you decide to go along the whole basket, which I didn't do, but if you did, then it'd be a lot more. Like if you were to go Aussie yen, that's adding another 3% on top of that. But I didn't decide to do that. Like I was very strategic in the actual ones I chose. The yen I stayed away from because you do have intervention risk, right? So
yeah,
that's another thing. And also price was just elevated as well. Aussie Kiwi at the time, the price action didn't look favorable, so I didn't want to chase price. So it was just a mix of the fundamentals and the technicals. Like if you look at Aussie Kiwi here, like if I were to buy this thing right now, like I'm chasing the highs. So it kind of just kind of threw me away from that. But yeah, speaking of that Aussie strength, like Aussie Swiss kind of holding that weight here, you can see if I put a Fibonacci from the low to high on this recent leg to all of them, see that Aussie dollar is pretty much at that 38.2, just shy below it. You can see Aussie CAD is also at the 38.2% retracement level, but then Aussie Swiss is not there yet at all. So that's kind of like the benefit of going along the basket as a whole.
Absolutely, absolutely. And you know what could be interesting? The Swiss yen. Someone mentioned the Swiss yen to me, and it's kind of a super play on interventions. So basically, the SMB wants a weaker Swiss, and the Bank of Japan wants a stronger yen. So like both interventions will lead to the Swiss yen going lower. So let me just bring it up.
Yeah, that's true.
So if you can position yourself on a short, although this thing is just exploding higher at the moment, if we get some evidence of a drop, like both interventions are bearish for this currency pair, which may be a good play if someone is watching it. Let me just try to zoom out a bit. I don't see any sort of.
Yeah,
Yeah,
that's what I was gonna say. And too, the swaps is 0. So, it doesn't really hurt you to stay in it for a long time. The only thing is looking left of the chart for guidance, there's no like level of resistance that we
Yeah,
can
there's
tap into or anything. So this thing could essentially like keep going. Like this thing has rallied, right? This recent leg here is 3,800 pips. So
Yeah.
that's the thing with the Swiss. I like the trade too, don't get me wrong. I have, for me personally, have like this trend line here that I'm looking at. It's still above that 50 days. So if you get a break of the 50-day here and you stay below this trend line, I think to the downside you have a lot of potential there, especially if you break that 200-day too.
Yeah. And like Rolex watches got 30% more expensive for people in Japan.
Really? Oh, well, yeah, that makes sense.
I mean,
That
if you
makes
just
sense.
look at the currency appreciation of the Swiss franc compared to the yen, let me just check it out. So if we go to, let's say, January 25, up to now, like 21%. So anything that's coming from Switzerland that you're buying in Japan is like 20% more expensive. At least that's how things should work. Maybe
Yes, exactly.
In practice, it doesn't translate into so much percentage. So anything else for today?
Not on my end here. So I'm pretty much watching that. Unfortunately, the Aussie is getting a little bit beat up here, but just for reassurance purposes, guys, like the reason why I'm holding on to this trade or the basket, like you're getting a very strong bullish reading on the Aussie. It's the strongest basket out of everything here. So, and if you just look at the very bottom, the weakest in the basket is Euro Aussie, Pound Aussie. So I still love the trade. Don't get me wrong. I'm happy to be in it as long as I get the swaps. If the thing starts to not go against me, but like if we start to continue to see some conflicting viewpoints, like we have super de-escalating comments from Trump saying it's almost over, then you have like this other side, right? So if you still see that, then I'll just exit the trade and re-enter on Monday with essentially hopefully the same price, as long as nothing new happens over the weekend. So that's pretty much my thoughts on that.
Yeah, cool. That's a very good advice to close before the weekend. I mean, in these uncertain times, volatile times, most of professional traders, they do close on Friday. And if nothing happens, great, you can reopen on Monday. But usually something happens. Especially like the last 2 weekends, Trump decidedly tried to post announcements during the weekend so that the markets aren't completely spooked, but it created massive gaps. So I think that's great, and I think I'm gonna listen to that as well, and probably be going flat into the weekend.
Yeah, I mean, I remember last Sunday, and I'll say this before I head out, Marco, but last Sunday I was at Target, at the store at Target.
Okay.
Thing opened up, it gapped up. I remember the chat was going insane in the Discord, and we hit 120 within hours. So, and a 120 handle on oil would be very bearish for the trade. So, yeah, I don't want to be in the front of that train. So, yeah, that's definitely my approach.
And I even forgot what happened during the last weekend. Why did the price go up so much? Maybe because there was no resolution.
They elected the son. They elected the son of the previous supreme leader.
Okay.
Yeah. And then also they hit some refineries that they didn't before. So they like actually hit oil infrastructure. And then Saudi Arabia pulled out of that. So that was like a huge, like, it was just thing after thing after thing that was negative.
Yeah, but is the sun even alive? I just saw a cardboard cutout of him, like a South
Did
Park.
yeah,
cardboard.
so he spoke today for the first time in public.
He
That's
did.
where
Okay.
that's where he said the headline, the Strait of Hormuz should stay closed. And he said that, the it should be used as a tool to pressure the enemy. That's what he said verbatim, tool as a pressure the enemy.
Yeah, great regime change. So
Right. Yeah, and
amazing.
the market didn't like that because I don't know if you remember, but Trump said he wants to be personally involved in picking the new leader.
Yeah.
Crazy, but and then you get him out of everybody. So yeah,
Maybe he can appoint Biden in Iran. So
right.
maybe that
I
could
don't
be a
know.
good option.
Send
Anyways,
Marco Rubio out there.
yeah, Marco Rubio or someone like that. Are we on tomorrow for a joint segment?
We should be. I think so.
Awesome.
What's today?
Great.
Thursday? It's already Thursday, man. Dang.
Yeah, it's been going fast. Absolutely.
All right, Marco. I appreciate the conversation as always. We'll see you tomorrow.
Yep. See you tomorrow and enjoy your day. See you.
All right. See ya.
So let me just check the schedule for A1. Let's see. Okay, so we have Tiger coming on after me, and tomorrow, yes, we do have a joint segment. So you're gonna see more of us tomorrow. Now, I'm gonna post the link to the form once again. So if you want to participate in the DNA funded giveaway, it's a 5K one-phase account. Fill out the form, and basically you'll get entered into a wheel of names, and I'll pick a winner in like 5 or 10 minutes. If you want to get funded and you don't want to wait for the giveaway, definitely do check out DNA Funded. So this is my personal 25K two-phase account. It's in phase 2, so I've passed the phase 1 this week, I think on Monday or on Tuesday. Took me a month and a half, something like that. So the start date was the 30th of January. Now I have a phase 2, down 1%. It is what it is, part of the game. So we're gonna see how things develop. What I wanted to share with you is there's the code A1 Live, which gets you 25% off any DNA funded challenge. So A1 Live, 25% off. Make sure to use it. As far as my watch list goes, I have 4 things. I first have the position. So position on the Aussie dollar, which was a signal in the A1 Discord, of course. It is running a little bit of profit. I took 50% off at 71215. Game plan for now is to hold it. I'm pretty much in the same boat as Alan. So I have the same view. Trail the stop loss. The Aussie is still pretty strong. The relative strength of the Aussie is super high. And by Friday, I will most likely close the position just to be flat into the weekend. So there's already been 2 weekends where you had some pretty nasty price action. If I show you oil is the best sort of gauge for this conflict. This is the open. This was the open on the 2nd of March, and this was the open on the 9th of March. So according to the history, according to the prior 2 weekends, we may see some stuff develop during this weekend. So stay safe. That's the main sort of lesson. I have a small position on the Euro Swiss, betting on a possible intervention from the SMB. 0.9 level. It's a pretty strong round number, pretty strong psychological level. SMB has been coming out putting some announcements about a possible intervention. They don't even need to do an intervention. Just the announcement about a possible intervention can sometimes be enough to push the markets higher, like this. Okay. So those are my 2 positions. Gold, I do want to buy it. I think long-term gold is a buy. I think long-term gold is bullish. I am waiting for the bullish reading from the Edge Finder. Of course, as I mentioned, right now it is neutral. And I have USD JPY. USD/JPY slowly grinding into the intervention level. So we are slowly hitting the 160 level where we could get an actual intervention from the Bank of Japan. We know that they definitely don't like that level. We know that they already did an intervention close to or a bit after we crossed the level. So game plan is this. Most likely selling at 160. Stop loss above 163. First target would be these lows. So essentially the first target would be this support level right here. That's the game plan. What else did I want to say about this? Yeah, if I do take this position, of course, you will be notified in the A1 trading Discord. Maybe getting in on an initial sort of smaller risk position just to be in, that could be a possible option, and then scaling into it, adding on as you get more talk from the Bank of Japan. If you're looking at a similar position, make sure you are watching Financial Juice and watching for Forex BOJ. Okay. Yeah, basically, looks like we're getting an attack on a US ship. Not sure. Watch for Financial Juice. Watch for the news coming out of the Bank of Japan. Okay. Now, time for the giveaway. Okay. So, USS Gerald R. Ford experienced a fire, not combat related. Okay. Time for the giveaway. Let me see all of the submissions. So the 12th of March. Okay, we have quite a few submissions, which is great to see. So let me copy all of the names, put them in my wheel. Wheel, spin, let's see. So Jack or Leo? Jack. So Jack J, congrats on being the winner. After my segment, I will send you an email with the code for a free 5K one-phase account. Again, if you want to get funded, we highly recommend DNA Funded. There's a big broker behind this company. I've had a great experience so far, and we have a 25% discount code, which is A1 Live. So take advantage of the code and yeah, check it out. I still have 3 more minutes before Tiger joins the stream. So let me see what else do we have that's interesting. Well, the stock market is selling off pretty hard today. That's definitely in response to the whole conflict. You know, it's ping pong, back and forth. So back and forth, risk on, risk off, risk on, risk off, risk on, risk off. Tough to read. Russell getting crushed, Nikkei getting crushed as well. Let me just remove this risk reward tool. The DAX looks absolutely horrible. So the DAX looks really bad. Silver, not doing much. Copper, not doing much. Platinum, not doing much. Bitcoin, just being flat. You saw some outperformance of Bitcoin on Monday, which was interesting after the war started. Now it's just remaining flat, but seems like there's not a lot of sellers left in this market. That's what it seems like to me. Oil is up on the day. VIX up 10%. Yeah, pretty much a risk-off day. Pretty much a risk-off day. Marcos, how do you close EU? Yes, I did close my position on EU. Would have been a pretty good position. So essentially, I closed it. I think, this week on Monday or Tuesday. Closed it for a break even. The reason was I was expecting a pivot to a de-escalation. So I took a buy setup on the Aussie dollar. I closed my euro dollar short. Looks like it was not the best decision because EU kept running lower. But then again, Aussie dollar is in profit, is still in profit, so still looks pretty good. Yeah, we're gonna see what happens. I've been waiting for the Aussie pairs to pull back all week. It's been frustrating. I know. I really like the Aussie Swiss. Aussie Swiss, it's already flying. Aussie is a super strong currency, and if you do get an intervention from the SMB curbing the strength of the Swiss franc, this thing can just keep on going higher. So I love the Aussie Swiss. It's a really good currency pair. Yen is strong today with USD and CAD. It is. Yen, oh, well, the JXY doesn't seem to be that strong. The JXY seems to be selling off a bit. The DXY is probably going higher, yes. So the US dollar catching a bid, of course, US dollar acting as a safe haven. Gold not following, which is interesting. Gold is actually down on the day. So we're getting sort of a repeat from the start of the war. Japan is quiet this week. I think they can do an intervention. I don't know. We're going to have to see. I'm not just going to blindly sell if the market hits that level. So if the market hits 160, I won't just blindly sell. I would still look for at least some sort of commentary from the Bank of Japan, like we are ready to do an intervention. We don't like where the current exchange rate of USD JPY is. We don't like that the yen has lost so much strength. We want to do something about it. So some sort of an announcement out of the BOJ that they are watching the markets, and then I'll probably take a sell position. So I won't just blindly buy. Anyways, that's about it. Thank you very much for watching. I wish you to stay safe and good luck in the markets. I will see you tomorrow again with a joint segment with Alan, which I'm looking forward to. And don't go anywhere because you have Tiger coming on right after me. So thank you. See you in the next one.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Hello. Sorry, I had my video off. Happy Thursday, everybody. Hope you're doing well. Get my computer working here. Had a little bit of a down snag here a minute ago with my internet, so sorry it's popping on a little late. But anyway, yeah, happy Thursday. Hope everybody's doing well. I wanted to close the show out again for the day, so go through a few charts here. You guys can let me know if you have anything you'd like me to bump to the top of the list. I'm just popping my chat out so I can bring it over here a little closer to me. And I'll be happy to put it at the top of the list, as always. I'm still in the pound dollar short, so we'll definitely take a look at that. It's starting to work pretty well today. The dollar's getting a little bit more strength on the day. So it's looking pretty good over there. It's the only one I'm in currently. One thing I did want to point out up front, guys, and they didn't ask me to do this, but if you guys can, if you've been following us for a while, or even if you like what you see after a few visits, I would encourage you guys, go check out Trustpilot and look up A1 Trading over here. Obviously, they've got a really good rating, 4.7. So if you can, just go on there and help the staff out. Help them out. Put some reviews on there if you like what you see. I put me a really nice one up here a while back. They wouldn't let me put in 10 stars, so I just had to give them 5. So, yeah, Give them a 5-star. Let's build this thing up for Nick and company. That's just something that was on top of my heart for the day. So wanted to encourage you guys to go do that. Again, just Trustpilot, search A1 Trading, and show them some love. So with that, as far as the Edge Finder goes, something cool that I kind of did today, guys, and I don't know why I ever really stopped to think about this from the start, but, you know, when it comes to setting up all of your assets over here on the right side, I usually always just have I've got 2 lists over here. I've got my main Forex list where I have all my assets, okay, all my everything kind of in a specific order, but I went ahead and created a new tab or a new watch list, if you will, and that way I can keep everything a little straighter. Okay, so as you can see at the top, I got my Edge Finder bullish items on the list. And then down here, I've got my Edge Finder bearish items on the list. And then obviously my neutrals just below. It just makes it easier to kind of keep things in order rather than having to sift and sort through all the other assets, find what you're after. And then for me, I've got the stock box as well. So I've got stock box bullish, stock box bearish. So all you guys got to do, if you've ever wondered, because I just found this out from watching some of Nick's streams back in the day. Anywhere over here, you can just right click and just click on add section, and then you can just double click it and change it to whatever. So wanted to show that to you guys, see if that was anything that could be of help to you. But I've already seen how it's kind of kept things a little straighter for me, just so I can start going straight down the list without having to sift and sort. Check Edge Finder every 5 seconds. So anyway, let me see here. Aussie Swiss, should we jump in long? Well, I would like to jump in long. I just need a pullback. Speaking of Aussie Swiss, it's in my bullish setups here. So just need a little more of a pullback. Okay. I mean, if I put on my split view over here, looking at the daily on the right, I mean, this thing's just at very expensive prices. Now, one thing I absolutely love about Aussie Swiss is the fact that we did finally pierce through this daily supply zone, as you guys can see. Got a little bit of wickage going on just above it. So that's awesome. Okay, that's a structure broken. That's a supply zone broken, a higher time frame supply zone broken. So when I see that, then obviously that tells me, number one, I've got a brand new impulse leg, because what is an impulse leg? An impulse leg is a leg of, several candles, however many candles it takes, that breaks the structure. So in this case, we want to find the swing low of that. Well, the swing low would be right here. Okay, let's just move this over so you guys can see. Okay, I want to look at the swing low and obviously the current swing high. That's all I care about. I think I kind of touched on this yesterday, guys, just basically looking at, current price like this. Whenever I see a brand new impulse leg form, that's all I care about. I don't really care about anything off to the left at all at the moment. So from here, my eyes go straight to that green line. Where's my discounts? Or if it's, in a downtrend, where are my premiums? So, from here, this is obviously where we would go and draw up our curve analysis. Okay. Swing low, swing high, find out our thirds, break it down into thirds. Okay. Lower third, middle third, upper third. And again, we're in a premium zone. So the highest probability setup is always going to be in a discount zone, which means obviously further down the list here, further down the price action. But yeah, that's something I wanted to point out at the outset, just breaking that structure. That's important to me. Okay. And then if we scroll all the way to the left on the daily side over here, you'll be able to see it's kind of, the fact that when we were last at this price, we had just a gigantic, ugly drop. Fair value gaps everywhere. I mean, this is a strong area. Now, there's a lot of candles to the left, but I'm not worried about it as far as taking a short. I'm worried about it as far as potential profit targets. So now that I know we've broken that strong level, yeah, that makes this impulse leg, to me, a lot stronger. Now, what would have made it ultimately the strongest for you on the Aussie Swiss is if we got a close up here, but we didn't get a close. We just got a wick. So anyway, I just point that out to say, hey, this is what I'd be looking at talking about a higher time frame. Okay, this is a 4-hour chart on the left side. So I've drawn up a couple demand zones, as you can see, but they're in the middle. They're just, remember, that's kind of the chop zone. But, perhaps we could look at this. utilize this area as kind of a former, resistance point back here. Obviously, we'd be cutting through these candles, but higher on the curve in the premium section, it's touching right here. Okay, former resistance, it's going right through that demand zone down here. So I think it would probably be a little aggressive on the higher time frame to be looking at that. If we drop to a lower time frame, the picture might change a little bit. Maybe we could look right here as a little bit of a swing low because we had a base rally. Okay, so another basing structure. So could we possibly find some demand in here? Whatever the picture looks the best in is the picture I'm going to take. So let's see here. Yeah, I would probably, let me try to get rid of that green. There we go. Get that out of the way. And yeah, again, that former resistance point's going right through this area over here. So I've got personally a demand zone here. It's a little lower. Now it's below this, this consolidation zone. But if we wanted to be ultra aggressive, we could probably pull a demand zone out of this area right here because we've got, let me get my box there. We got three green candles coming out of this zone. Okay, got your base, and then you got 1, 2, 3 green candles, and then it kept going a little bit more to finish out the rest of that supply zone. So might be a little aggressive, but it is a possibility. I won't tell you what to do on this thing. I probably won't even trade this. It's just a little too rich for my blood. That's why I have an alert set down here. Yes, it is in the it is in the middle of the zone if we're looking at our swing low, our swing high, as far as our curve analysis. So it's a little risky, but again, just because it's in there doesn't mean I won't take the trade. I'll just take off some risk. So, that's kind of what I'm looking at as far as Aussie Swiss. Now I've got my alert set at 55.25. So that's kind of what I see on Aussie Swiss. And the only reason, part of the reason I should say, that I'm okay with possibly being a little aggressive on this is because we have such a strong reading on the Edge Finder. I mean, we got a very bullish reading. Plus 10. That double-digit score. Double-digit scores or higher make me a little more comfortable buying a little higher on the curve like that, if that makes sense. If I have a +5, a +6, I'm going to wait for a bigger discount because I need more Edge Finder strength. I need more fundamental sentiment strength, if that makes sense. So, yeah, that's what I'd be looking at Aussie Swiss. What else we got over here? Aussie dollar is approaching a demand zone, says Perry. Okay. Let's go have a look at it. It is. I think we got us a 4-hour zone here. And again, swing low to swing high. That would obviously put us in the middle of the zone. But some of you may look at this as a 50% fib retracement. Okay, there's several different ways of doing this. That's kind of a good rule of thumb, buying at the 50% or lower. But yeah, I'm just a little more conservative with it as far as, again, breaking it into thirds. That just seems to be where the highest probability entries are. Anytime I can find a demand zone in the bottom third, right? That's really the highest probability. But yeah, you got your 50% fib tracers that'll be buying in this area. You do have unfilled orders from the zone that you just mentioned, that you just brought up. That demand zone produced 1, 2, 3 green candles in a row. I like that. Those 3 green candles broke and closed above this structure to the left. I love that. Okay, I'd be just for throwing more colors on my chart here, I'd be drawing that up. Okay, swing high, broke and closed above it. A little bit of retracement, but we continued and broke another structure. So for me, yeah, I mean, and it's clearly on my watch list as well. So if we can, for me personally, I'm already in a dollar-based trade since I'm short the pound dollar. So if I were not in it though, yeah, I'd be looking for a couple things on this. Let me go down to a 1 hour. Okay. So here's the cool thing about the 1 hour chart. We've got our 50 EMA, which is the light blue above the 200 EMA. So that's a good story there. We're obviously piercing the 200 EMA as we speak. And then the other thing I like is our RSI went below 20. It's oversold, very oversold. So all I'm waiting to see is price to come in and collect the unfilled orders. And if we do that and we get us a green candle like that, let's just say, well, yeah, whether it has a little wick on it or not, that's what we got to take into account. I'd be looking to buy the breakout right there. Okay, that's a very conservative way of, looking for a confirmation entry. Bounce in, collect the unfilled orders, and give us a candle that's at least trying to tell us, hey, we're trying to change our momentum. Because again, swing high, we're in a miniature downtrend, right? So we got to see the momentum kind of turn around. Now, if this same setup were down here in the bottom third, I wouldn't require this as much. I'd be okay with a limit order down here because it's automatically giving us the best discount we can get within this current impulse leg, right? So because we're in the middle, we're diddling in the middle. You guys hear me say that a lot. We're diddling in the middle. So it's at least got to prove itself to me for my comfort zone, for my risk tolerance. It's got to prove itself that, hey, I'm trying to turn around for you, Tiger. Okay. And then again, we wait for the breakout of that, start getting into the order up here. You do have a swing high up here. So what would our reward to risk look like? Let's just pretend that's where our bullish candle is, just for the example's sake. Okay. To the swing high, that's 90 pips. So what's 90 divided by 2? That's 45 pips to give us a 2-to-1. That would put us, it would put us below the demand zone. So there you go. I mean, you'd basically have your line in the sand, just below the demand. So, if it were to dip a little deeper, maybe it bounces into this 2-hour, because we actually do have a little bit of a 2-hour candle within this 4-hour candle. So remember, the more set of eyes we can get on one area, the better. That just means more traders, more sets of eyes to be looking to buy that area. That's that white dashed line. That's kind of the proximal line of the 2-hour, which is also the proximal line of a 1-hour. So it's basically, several sets of eyes. So yeah, I mean, that's what I'd be looking at. Again, not financial advice, as we say all the time, guys. But if I put my money on it, I would be looking at something like that, because everything else is lining up. RSI, moving averages, not to mention over here on the daily, we got our 8 above our 21. So that's a mechanical confirmation of our uptrend, along with the higher highs and lows within. So hope that helps. And then as far as the currencies themselves, we are still sitting at the top with the Aussie, guys. This thing hasn't changed. In fact, I think it got 3% stronger. I think we were at 80 yesterday. Is that right? So continued strength in the Aussie, continued weakness in the pound. We do have some decent strength in the dollar, which is why I like my pound dollar short, selling pound, buying dollar strength. And the dollar actually got just a little bit stronger, because wasn't it? I think it was like 63% yesterday or something like that. So got just a little bit stronger. So that's the current status of the currencies as an individual. And I do want to show you guys this. So you guys, I don't know if you saw it on the start of the chat when Nick was speaking, but I got a little bit annoyed. I got annoyed with the Dow. Let me show you the Dow. Let me just go show you this. Where you at, Dow? Yeah, see, I'm already on this other list. I've gotten turned around. So let's go back to our regular list. I missed my entry by $25. $25. $25. Where's my stuff at? There you go. Dow. Look at this. Look at this. Look at this. Okay, I got my 1-hour chart over here on the left. See where my alert's at? It's on the proximal line of that 1-hour supply zone. And look where our wick went. Look at this. These kinds of things will make you laugh. First, it'll make you annoyed, and then it'll make you laugh. Okay, on a $48,000 instrument, it missed my alert by $25. So I should be in this trade with Nick and everybody else, but I'm not, because I'm too damn picky about my supply zones. 1-hour daily confluence. Now it touched 1 hour daily. It touched the daily, and the daily is all it took to push price down. You guys see that? It just barely wicked in. Okay. I do miss a lot of trades like this, but for me, it's just because I want to see more sets of eyes on it than just the daily. Lose you guys. Oh, there you are. Lost you there for a second. Yeah, it's frustrating, right, Aerocross? I'm used to it. I'm used to it, but it keeps me out of a lot of losses, guys. I don't get into a ton of trades anyway. Maybe a couple a week. The longer you're in trading, the less trades you'll eventually start taking, because you'll start getting pickier. You'll start learning what works and what doesn't work. You'll figure out a lot of ways to filter out bad signals. Okay, that's why I have such an extensive list of odds enhancers. It's just a lot better. A lot better to just pick the high quality stuff. So, let's see what else we got, ladies and gents. Hey, by the way, I'm going to do another 45 minutes after this show ends. I normally do an hour and a half for my live streams in the morning, but it got to the point where I was cutting into Nick's start of his show, so I don't want to do that. So I cut it down to 45. I'm just going to test it out the rest of the week. If you guys have any interest, okay, I figure I'd pull in some more West Coasters, maybe some Hawaiian people that are up early. Just a low, kind of a low-key thing. Answer questions. Obviously, if you have a chart you want me to look at. But I'm going to do that right after on my stream, about 5 minutes after the show ends at Trade Like a Tiger. So I did want to just plug that in case you guys are looking for a little bit more, or just looking to get away from the charts for a minute. Just simply ask questions. Hey, what's the supply zone? Hey, if you want to ask questions about a trade plan, whatever the case is. Okay, I'm going to test it out today and tomorrow. We'll just do 45 minutes, the pre-lunchtime doldrums. Okay, right before Wall Street goes to lunch and does all their illegal stuff. Okay, and say that they're off eating. So I'll do that for you guys as well. Excuse me. How many trades I make per month? 8, 9, 10, probably 10 or less, right at about 10. Because we're on the higher time frames. I personally focus on Forex and basically everything that's on the Edge Finder. I mean, this is what I focus on. So, if most things are going to be neutral, usually about half the list is neutral at all times. So that just leaves us with a little less. And then again, I get picky with my zones, very picky. Okay. So picky, I missed out on this Dow entry. Right. So anyway, yeah, not too much. I do mess around a little bit with the smaller time frames too, but not much. My bread and butter, guys, where I personally have had my most success, daily 4-hour confluence. That's it. Okay. So anyway, as far as other assets I'm keeping my eye on, obviously still the Aussie pairs. Okay, still the Aussie pairs. So Aussie Kiwi. Let's go look at a couple of these others real quick. Aussie Kiwi. And the case with all these Aussie pairs, guys, they're just too expensive at the moment. They really are. See, I mean, I put an X on some of these demand zones because, like this one, for an example, let's get that out of the way for a second. Let's go back to a 4-hour. See, that's a 4-hour zone. But the problem is the leg out candle. Well, first of all, it sucks. Second of all, there's no volume spread analysis. It's a blue candle. So, and it's not even getting down to a former resistance point. So anytime price is in this area where you got to swing high and you've got to pull back and it's not even made it to a former resistance, that's extra expensive. I just don't like trading up here because I like to see these traders over here pop in. Okay, I like to see those. Now, I ultimately buy from the zones. So in this example for Aussie Yen, I just wanted to go a little deeper to catch the unfilled orders from the demand zone. That's why I've got my alert there. So, yeah, that's Aussie Yen. Yeah, exactly, Perry. Exactly right. It's just too expensive. We have to be cheap asses when it comes to trading, guys. I mean, so many people. The average retail trader, what are they doing? They're buying breakouts. Price is consolidating, and then they wait for a breakout up or a breakout down. Well, they're automatically buying at an expensive price. Now, sometimes they'll win some money. Sometimes those breakouts will continue, like this one right here. Okay, great example right here. This one continued up. So if you were a breakout trader, you're making some pretty good money. But more often than not, what happens is the master pattern. Okay, that's where you get the basing action, you get the price push out one way or the other. And the banks are watching that because they know that if they're buying here, they know they're putting their stop losses down here. So they will manipulate price to go down and collect liquidity, and they'll make all the expansion lanes. They'll get bigger and bigger. Some call it the, some people call it the megaphone pattern. I know that's what we used to call it. Where's my megaphone pattern tool at? Megaphone, where are you at? Trying to. Where you get price consolidate right here. Okay, consolidate. And then at some point, you're going to break out to one side or the other, go up, collect that liquidity, come down, collect that liquidity, go up. This process can repeat a lot before it ultimately catches a trend one way or the other. This happens all the time because every single time price makes a higher high, or in this case, a lower low, it's finding higher time frame traders. It's finding those higher time frame zones, the demand zones, the supply zones, the unfilled orders where other, the higher time frame traders are waiting. So that happens a lot. So, just go test that out. Just go check out any chart. You'll see that fanning out action quite a bit. And that's really all that is just manipulation. Okay. Because there's stop losses above every single one of these points where traders took price the other way. So anyway, just got off on a tangent on that, but I thought that might help you guys out. But yeah, let's see here. So Aussie pairs, we know are overpriced. I'm with the rest of the team. I've got no interest in gold or silver right now. Too neutral. Dollar yen look at here. All right, dollar yen's breaking this supply zone confluence, guys. So what does that mean? That means I've got a new impulse leg. Now, I prefer that this leg over here closes. I really do. Let's zoom into that. Okay. It's 10:11, so we got 49 minutes. I would really like to see this candle close, because if this candle closes up here, then that makes this demand zone I drew up extra special, because it's the origin of an overall strong move up. And I'll just include that wick. But let's just say we close up here somewhere. Okay. Where does that put my demand zone? Does it put it in the premium zone? Does it put it in the middle, the retail chop zone, or does it put it in my discount zone? Right? Discount zone. So let's get a close up here. Let's get a drop. And this probably ain't going to happen today necessarily, but going into next week, as long as Edge Finder keeps agreeing with us, hell yeah, I'll stick with that. And then before I get out of here, I did want to mention a couple other things, guys. Just keep in mind, Nick does have his Ola Prime code. You got the QR code there on your screen. If you're looking for another type of challenge account, another prop challenge firm, definitely give them a look, olaprime.com. The code you can manually punch in if you prefer is A1T35, get you 35% off on some of their challenge accounts. So yeah, I definitely wanted to plug that. Again, guys, if you can, just show them some love on the Trustpilot site. And then I have my alert hit. And then yeah, just to kind of finish out, let's see here. Was there anything else I was looking at? Oh, okay. Yeah. NAS looking red. Let's go look at NAS for you real quick since we got a minute. NAS is way too choppy. Just looking at the daily over here on the right. That's Chop City. But we did drop in. If we look over here on the left, we did drop into this demand zone down here back in time and got quite the bounce. Look at it. You guys can see the zone started over here. That was a 4-hour zone. So we bounced and then just went straight to the top. So I don't know. To me, that's a little too choppy. Anytime I see a bunch of wicks and a bunch of candles hugging each other side to side, I stay away from it. Because remember, guys, this is fair value. Okay? That's fair value. Now, you're going to have a couple random spikes in and out, but for the most part, that's fair value. That's not where we want to trade. Okay? We don't want to trade where buyers and sellers are agreeing. We want to trade where where price goes and then just immediately spikes like we have up here. Okay? That's the way I treat supply and demand. I'm looking for the out of value zones. And just like looking over here, just kind of finish this up for you. Okay, same thing. That's just one big chop zone, one big sideways chop zone. I stay away from that. Okay, I'm looking for zones like down here, like up here, like up here. And avoiding like the plague those middle zones. That's where people go to die. Is those chop zones. So yeah, definitely going red, but I could see it at least dropping all the way down to 24.1. That's where we got another 4-hour demand zone waiting right here. Right there. So with that, ladies and gents, we'll be back tomorrow. Yeah, like I said, 5 minutes. I'm going to hop on. If you guys have any questions, okay, we've already had enough analysis for the day, but if you guys have any questions or anything, just pop on at Trade Like a Tiger over here. You can find me, and we'll just do a quick, 40 minutes or so if you have any thoughts, have any questions. Okay, so with that, have a wonderful day, and we'll see you tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.